client service or your customer interaction or your billing or whatever, you're going to have to know that it works.
This is all very nuanced, and a lot of your clients are probably thinking, all right, our market's going to go up or down.
I know.
And what do we have to look at to figure out where we should invest? And if there is some sort of macro theme, it really does come down to the yield space. This idea that you see some of these stories as potentially constructive, earnings growth is potentially positive, and yet it all hinges on what happens today with Fed Chair Jay Powell, not necessarily today, but just generally with the bond market. Can you talk about that relationship?
Sure. I mean, look, I think what we've seen is, the magic number's been 4.5%. When we get yields through 4.5% on the 10-year, we've seen those positive correlations between yields and stock prices. The quote that Jonathan started with, that starts becoming a headwind to valuations. Now, why is 4.5% such a magic number, right? I constantly explain to people, look, we've been in an economy that's been nominally growing at more than 5% per year. And as long as you're growing faster than your cost of capital, you're going to be able to cover your interest payments, right? As those interest rates get closer and closer to that nominal growth rate of 5%, that ability to cover interest payments gets harder. You start thinking, well, are some of these companies actually going to have dented margins because their cost of capital may actually be 6, and maybe GDP is only 5. And so we're watching the direction of the long end. What we have observed is that a lot of the movement on the long end has been driven by two things, not inflation expectations, actually by our analytics. What we're looking at is we've had positive economic growth surprises, right? So that's taken up the real component. And we've had an increase in the term premium. And as I know having kind of, studied fixed income for a really long time, over the last, 80 years, term premiums on the long end have been as wide as 150 basis points. Term premiums, for your listeners who may not know this, are basically just the extra risk premium that investors demand for policy uncertainty, right? For the fact that over time, things change. Anything from policy to technology to et cetera. And so, I think what we're looking at is, what are the drivers of those interest rates? What has been interesting is Fed expectations got crushed in the fourth quarter. So for us, our observation of what's happened over the last, 6-8 weeks is it hasn't been that much about the Fed. So this is a very long-winded way of me answering your question. Look, I think Powell today is going to be very measured. I think he's going to say very little in this press conference, and I think he's going to try to say as little as possible about anything that has to do with the White House. Anything about tariffs, anything about debts and deficits. I think he's going to really walk a very fine line, and he's going to stick to the script of, we're data-driven, that's it, we've had some stronger data, we think inflation's under control, we're watching and waiting.
So all of that said, if the Fed is no longer in the driver's seat, the policy uncertainty is in the driver's seat.
Yeah.
What kind of move up, we're looking at a 10-year right now, 4.53%, what kind of move up would you have to see real serious declines in equities?
I think if we surge back through 475, sometime over the next month, that just stops stocks in their tracks again.
Just 22 basis points away. Lisa, it's good to see you.
It's great to see you.
Lisa Shallard there of Morgan Stanley on the Federal Reserve. This one apparently is easier, relatively speaking, and I would say because they don't have to put out forecasts. And Lisa, it gets harder on March 19th when they meet again because they have to put out forecasts.
And they have more sort of room to discuss these policies. They'll have actually come into effect, or we'll have seen some of the agenda in the first 100 days. So suddenly it becomes much more difficult to just say we don't assume. We don't speculate, because you don't have to speculate and assume. You can see what the proposals are. You can see the potential ramifications start to trickle in.
Or by the time we get to March, it's still a threat, just sort of hanging out there.
If that's the case,
might be.
If that's the case, that also would be interesting, because that will have economic effects with people bringing forward orders and potentially ratcheting down some of their supply chains. That would be interesting as well.
A mini stimulus. We talked about this yesterday. Federal Reserve decision coming up a little bit later on this afternoon. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. President Trump is offering buyouts to federal agency employees who don't want to return to the office. The buyouts were offered in an email, which also warned that the administration is seeking a, quote, more streamlined and flexible workforce. The National Treasury Employees Union says that the email was designed to scare staff into quitting. Chinese tech giant Alibaba has released a new version of its AI model. The company is claiming that its model outperforms OpenAI, Microsoft, and DeepSeek. Alibaba is engaged in a hot contest to recruit China's AI developers to use its tools. It slashed prices in recent months to win over even more users. LVMH shares are sliding 4.8% in the Paris trade. The luxury house's fashion and leather goods sales declined 1% in the fourth quarter, casting doubts on a quick recovery in luxury. Despite the declines, Tiffany's sales were up, and Louis Vuitton had a strong start this year with double-digit growth. CEO Bernard Arnault said that he predicts a booming U.S. market. And that's your brief, John.
Danny, thank you. Appreciate it. More from Danny in about 30 minutes' time. Up next on the program, tech earnings on tap.
What causes U.S. exceptionalism? It is tech innovation. We have the highest earning companies in America. These big tech names, though, are not an obvious loser to me. The top 5 names, they have access to the software and the interaction with their clients, so volume can actually sustain them.
In just a moment, we'll catch up with Nikolai Tangen, the CEO of the Norwegian Sovereign Wealth Fund, on U.S. dominance and tech concentration. That conversation just around the corner. Live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Here's a snapshot of the price action right now. Equity futures just about positive by 0.1%. Big afternoon coming up. We'll hear from the Federal Reserve and Chairman Powell. That news conference is at 2:30. The decision at 2 p.m. And then we get some big earnings later from Microsoft, Meta, and Tesla. At the surveillance this morning, tech earnings on tap.
What causes U.S. exceptionalism? It is tech innovation. We have the highest earning companies in America. Our preferred sectors are still tech, industrials, utilities. So we still like those sectors, again, at a price, and you just got a better price. These big tech names, though, are not an obvious loser to me. The big tech hyperscalers, your top 5 names, they have access to the software and the interaction with their clients, so volume can actually sustain them.
So here's the latest this morning. Meta, Microsoft, and Tesla all reporting after the closing bell. Elsewhere, tech stocks fueling a 13% total return for Deutsche Bank Investment Management in 2024. But the fund missing the self-imposed target for a second year in a row. Joining us now, I'm pleased to say, the CEO of Norway's Sovereign Wealth Fund and a good friend of this program over the year, Nikolai Tanger. Nikolai, welcome to the program, sir. I wanted to kick it off with concentration risk, particularly in the United States, and how you perceive things at the moment, particularly given what we saw in Monday's price action. Is this heavy tech weighting in global equities a desired feature or a bug from your standpoint?
Well, I think this consists, of course, of really fantastic companies, so it's absolutely a great feature. And we have big gains from these companies. These are, many of our very large holdings in the fund.
One thing you said last week is that maybe the contrarian investor might consider pulling back from the United States and leaning into China. Those comments timely, given the events of Monday. How are you actively positioning around that theme, if at all, into 25?
No, we are not positioned around that theme. We just talked about what is the contrarian thing to do. And of course, the contrarian thing to do is to reduce US tech exposure. I'm not saying it's the sensible thing to do, and it may be way too early, even though on Monday it certainly seemed pretty clever.
Is it the prudent thing to do? If it's the contrarian thing to do, can you tell me whether you think it's the prudent thing to do, to maybe rebalance some of that exposure to elsewhere?
It's a very, very difficult question. But the thing is that very many of these large tech companies, it's the same driver, it's the same geopolitical risk, it's the same world hotspot. And so if you get correction in one of them, you suddenly can see, very much of your portfolio coming down at the same time, because now we are seeing the top 10 companies in our index is basically accounting for 20% of the market.
Nikolai, are you adjusting any of your diversification after last year's missing of the benchmark to be more concentrated, since that's where the gains have been?
No, we are not. We are a very long-term investor. We are widely diversified across the world. We own, part of 9,000 companies, 1.5% of all the equities in the world, and so we continue to be diversified in that way.
How much are you thinking about real estate as a potential holding, or just real assets in general, since they were an underperforming part of your portfolio? Do you still see them as potentially being a good diversifier at a time where some people are talking about structurally higher benchmark yields?
Well, we think real estate now is becoming increasingly interesting, and so we've been pretty quiet in the real estate market over the last few years, but over the last 3 to 6 months, we've added to our exposure, and actually both in real estate, but also in renewable infrastructure assets.
Is there a particular location that you're interested in? Let's start with real estate, where you've been really expanding some of your footprint.
Well, just over the last couple of months, we've been expanding in London and some of the main cities in the US.
Nicola, I would love your thoughts on the new Trump administration as well. You've experienced this before. There's always uncertainty around policy. Do you have a base case on the changes you're expecting this year?
Yeah, you know what? We are a non-political entity. We don't have, we really don't have a view on politics generally, so it's a bit tough for me to answer that.
Oh, I don't expect you to take a view on politics, just policy. Do you expect trade changes? Do you expect changes around the fiscal deficit? Do you think they can cut that back? Do you expect it to be increased because of the tax cuts they might expend? Just your assumptions on policy. Forget the politics.
Okay, so what we are seeing as a global investor, we are seeing that some of the climate initiatives are being rolled back. Now, we think climate risk is a financial risk. We do see tariffs, which are hitting some of our European companies. We are seeing a bit more risk for inflation. But at the same time, when we speak to US CEOs, they are very, very optimistic about the outlook. So, positive backdrop for the US companies.
You said that there's still a risk of inflation, and I know that you've warned about the deficit and how much it's been increasing, and I just wonder how that's colored your view on bonds as a diversifier at a time when potentially, if yields stay where they are or even go up, they don't offer that same sort of hedge that they have in the past.
No, I think that's correct. And it's very, very difficult to know what's going to happen with the long end of the yield curve, because if you do get significant inflation, you could suddenly have a moment where investors say, "Listen, we want to have a higher coupon to finance the government debt." Now, that's not only in the US; that's in many places in the world. I think it's IMF who says that there is combined world government debt of $100 trillion. And so these are very significant numbers.
How has that colored the view of how you want to allocate some of your assets? At one time, it was thought that maybe equity allocations should come down in favor of private markets or real assets, and that bonds would stay the same. Is that changing, where suddenly bonds become as much of a risk in some ways as equities?
No, I just think it's a case for being, very broadly diversified and taking an even longer term look at what you're doing than before. I think that's really the case.
Nikolai, just a final question. I'd love your thoughts on this. Given the price action we saw on Monday around the innovation of DeepSeek, as you sat there with the team, did you believe some of the claims that were being made, that this was somehow export compliant with regards to the chips that they were using, that they managed to develop this for around $5 million? Do you and the team believe that?
Well, I think there are cleverer people than me who can make that judgment. But what we do observe is when we speak to CEOs across the world, the innovation power of China is just really tremendous. We see it in batteries, electrical vehicles. We see it in pharma. We see it in mobile phones. We just see it across the board. Very, very strong innovation power. So I think that's the lesson to draw from that.
Because, Nikolai, as you know, whether you believe in that or not would go some way to whether you decide to push back against some of the big capex decisions of the big tech players, particularly those located in the United States. Do you think those big outlays of cash make sense?
I haven't got a strong view on that, but what I do think is that cheaper models will lead to a better democratization of artificial intelligence, and that's generally good for the world. Interestingly, we did a survey in our company just before Christmas, and we asked our colleagues, how much have you improved your efficiency over the last 12 months on the back of these new tools? And the average was 15%, 15% in our company. So these are huge gains.
It's happening, that's for sure. Nikolai, I appreciate your time. As always, thank you, sir. Nikolai Tangen there of Deutsche Bank Investment Management on US tech concentration, dominance, and some of the innovation we're seeing coming out of China over the past week.
Yeah, given the fact that it could potentially be the tipping point for people to really understand the adoption. That last point was really interesting, that each of his own staff had increased their efficiency by 15%. How do you quantify that? This is already happening, but how do companies quantify this at a time where you are seeing adoption? It just is sort of stealth.
I watched Mike Wilson's interview with us from Morgan Stanley a number of months ago, and Mike was talking about this, the shift from enablers towards adopters, and how close were we to making that shift? And it looks like we're closer after what took place on Monday.
It might be already happening. It's just that there hasn't been this aha moment, sort of like ChatGPT wasn't the first time that a large language model had ever been used in this capacity, but it was the aha moment. What will that aha moment be where people understand the degree of efficiency that some of these tools already are having in different companies?
Equities on the S&P, just about positive on the S&P 500, going into a big afternoon. Up next on this program, the former senior White House trade advisor to President Trump's first administration. We'll catch up with Kellyanne Shaw in Washington. From New York City, you're watching Bloomberg TV.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Two hours away from the opening bell, equity futures on the S&P just about unchanged. On the Nasdaq, still positive by, let's call it 0.4%. With some morning movers, let's cross over to Manus Cranny. Good morning, Manus.
Jonathan, good morning. 29 days into the year of 2025, and the question is it evolution or revolution when it comes to AI? Alibaba don't want to be left out. Here we go, up 3.74%. They've delivered a new update to, guess what, their AI product, Qwen 2.5 Max. So this is about standing shoulder to shoulder with American AI. Now, the question is it China versus America, or is it open source versus closed source? Those are the kind of debates that we're going to have. BI have now said the question for them here is the monetization challenges are still there because there's cutthroat competition in China relative perhaps to the monetization proposition here in the United States of America. So that's the Alibaba story. ASML. They lost 19 billion euros in market cap on Monday. We have this bounce back by 7.5%. The order book is swelling, over 7 billion euros, double the estimate. And they're talking about the guidance. By the way, this stock dropped the most in 26 years in the autumn time because they cut the guidance for this year. Right now, they're saying we see the opportunity towards the highest part of the full year guidance. So it's about raising the expectations again. Emergence of DeepSeek is good news, and their reliance on China will drop from 25% down to 20%, I think partly due to regulation and demand. And then when it comes to superlatives, you got to hand it to the CEO over at T-Mobile. A monster fourth quarter. I love that. Who wrote that? The PR that wrote that for him. Smashing all expectations, $2.57, up 54% year on year. They added over 900,000 post-paid, and they have had the best start of the year in terms of the guidance ever. Superlatives, right? Jonathan.
Love it. Thanks, Manus. Stock up nicely by 8.5% in the pre-market. Under surveillance this morning, Microsoft and OpenAI are investigating whether DeepSeek accessed unauthorized data from OpenAI. Sources telling us here at Bloomberg that back in the fall, Microsoft observed individuals they believe may be linked to DeepSeek exfiltrating a large amount of data.
And this piggybacks on what David Sachs, who is Trump's artificial intelligence czar, said yesterday in an interview where he said there is good evidence of DeepSeek doing something called distillation, where basically they take the output from an OpenAI and they use it to recreate the model that they're using. OpenAI tries to prevent this with different types of protections for their IP. If this is true, does that change the story to basically make it less impressive because it wasn't necessarily a $5 million effort to quickly, on cheaper chips, recreate OpenAI?
We saw some big moves on Monday, and now we're all asking the questions. And these are the right questions, just what exactly was going on here. I've got another one. I want to know how the hedge fund that's affiliated with DeepSeek actually fared on Monday, how it was positioned, whether it did well off the back of this sell-off or not, because there was a heck of a lot of money to be made given this sell-off.
That's next level conspiracy theory. I love it.
I just want to know.
I've got a feeling that the Chinese won't investigate and release that that report publicly, but it is a good question. Look, there are a lot of questions. That said, the moves in the market have been interesting.
Yeah.
What stuck and what didn't stick. NVIDIA walked a lot of it back. Meta, Microsoft, they walked a lot of it back yesterday. The ones that didn't were the infrastructure plays. And that, I think, is telling and actually speaks to a larger issue regardless of DeepSeek.
Worth pointing out also how much of this conversation took place on X. And shout out to Joe Weisenthal, our colleague, of course. Joe's fantastic on these things. Joe, one of the early people on X to ask the question, if this is real, it raises big questions about what's happening as an investment thesis in things like NVIDIA and other tech plays. And that buzz that we saw over the weekend was almost exclusively on X. It's a lot of sophisticated people giving their thoughts about what would happen on Monday. And it was like back to back, Monday, or rather Saturday through Sunday. I woke up Saturday, it was all anybody was talking about.
Which, again, speaks to, we knew about DeepSeek for a while. What catalyzed this moment where suddenly this was it and everyone realized this could potentially change the model?
Number one in the download charts, I think changed things a lot and changed it pretty quickly. Elsewhere, Apple has been secretly working with SpaceX and T-Mobile to add Starlink satellite support to the latest iPhone software. Sources telling us here at Bloomberg about this surprise tie-up. The latest iPhone update rolled out Monday now supports Starlink service.
To me, this is such a boon for T-Mobile, and I'll explain why. Members of my family and myself, they have T-Mobile, I have Verizon. And when we go on a hike or we're in a remote place, they lose access right away and I don't. And this is basically T-Mobile saying, we got your back, because you can get your texts and you can read your news if you're in the United States in a remote place by using Starlink. There are broader implications, of course, about Starlink and how it's going to be used in a commercial sense. But to me, that's the most interesting aspect, is how this could potentially change the game on a competitive level.
Do you wind up family members about cell phone service? Is that what you do? Is that actually what happens on your hikes?
Well, okay, look, if you're on a hike and you want to know where you're going and you want to know how much further you have on the hike,
of course.
Right? So I can do it, they can't.
All right.
If we're in a car and we're in a rural place.
You're in control.
I'm in control. I can look it on maps. They cannot.
I'm sure you don't abuse that at all. As we count you down to President Trump's Saturday tariff deadline, the White House saying it's prepared to slap 25% tariffs on North American trade partners, Mexico and Canada. The Canadian politician Chrystia Freeland, running to replace Prime Minister Justin Trudeau, telling us here at Bloomberg she sees Trump's tariff threats as a pathway for tougher policy on China.
Some of the rhetoric was really quite colorful from her in this interview with David Gura. He has come to the conclusion, Trump has come to the conclusion, that if he can show the rest of the world how mean and tough he can be with his closest partners and allies, how much he's prepared to beat up on those really nice Canadians who throughout history have been great partners for the U.S., how do you think he's going to make China feel? So basically, they're looking at this as, okay, we're being used as a negotiating pawn, but we're your nice allies, and we want to work with you with respect to China. You go further in the interview, and then she's like, by the way, if you do this, then we'll also put all of these tariffs on, because we know, just like any kind friendship, you disrespect us unless we actually actively fight back. So, thanks.
We'll see how this actually works out this weekend and beyond. Anne-Marie's going to continue the conversation. She joins us from Washington with a special guest. Hey, Anne-Marie.
Hey, John. Yeah, I'm with someone who's actually been in the room prior, during Trump 1.0, negotiating some of these trade deals. Kellyanne Shaw, former senior White House trade advisor under Trump, now at Hogan levels. Thank you so much for joining us. So we're counting down to this deadline Trump just kind of threw out there. February 1st, it's on Saturday. Do you think he follows through?
I do. I think the most important thing about negotiating for President Trump is that when he says he's going to do something, you have to take that threat seriously. And this is something that he's been talking about for months. It was back in November that he originally said he was going to impose these tariffs on both Canada and Mexico for immigration and fentanyl. And so now he has doubled down and said that he is following forward on February 1st.
So do you think we'll see 25%, or do you think it's going to be more of a gradual approach to get to 25%? Will he give importers 90 days? Like, what's some of the details we can expect?
Yeah, well, at the end of the day, it's the president and the president alone who makes the final determination on tariffs, including tariff levels and product coverage. And I saw that many times, that this was his decision to make. But he has said several times over the past couple of weeks, it's 25% on Canada and on Mexico. So that's what I'm expecting. But just from a practical perspective, in terms of implementing tariffs, you often need a couple of days of delay, if not a week to 10 days, just to give importers notice, let brokers know, update the HTS and some of those logistical issues before they go into effect. But I'm expecting him to announce tariffs, and tariffs that would go into effect pretty soon.
And they stay, or is this a negotiating tool?
I think there are two different types of tariffs when it comes to President Trump. There are the tariffs he talks about that may be used to address the U.S. trade deficit, to some of the economic concerns, some of the supply chain issues, and then there are tariffs for non-economic reasons.
Like Colombia over the weekend.
Like Colombia, like Canada, like Mexico, immigration and fentanyl. And those, it's purely about putting pressure on another government to try to take certain action. So I'm not expecting those tariffs to stay in place very long, provided that Canada and Mexico come to the table.
We have not mentioned China, yet we're having an entire discussion on tariffs. Does he announce 10% on China on Saturday? Why have they been so quiet when it comes to Beijing?
Yeah, and he's been a bit ambiguous on what he's going to do with China in terms of the 10%. At one point, he said he was going to move forward with it. Another point, he said he's still considering that. I think the press secretary said yesterday it's still on the table, but she wasn't certain or at least definite about whether China tariffs would go into effect. I think there's a longer play here. If you look at the memorandum that the president issued on day one, he is directing his USTR to do a review of the phase one deal. He's directing his USTR to look at the tariff increases that President Biden put on. And I think he's teeing up for a broader negotiation. So it could be, let's not muddy the water in the short term, and let's wait until after April 1st, until we're getting ready to really engage with China before he moves forward with action, because that's the most consequential economic relationship in the world.
You negotiated phase one trade deal. So how much further do you think Trump 2.0 will take it?
Well, part of that depends on China. And so when we negotiated the phase one deal, we were very much focused on a number of the issues that were at stake in that Section 301 report. And it was very clear to us that the president wanted us to get China to stop stealing U.S. technology, stop engaging in unfair trading practices, and stop subsidizing certain industries that made U.S. exporters less competitive around the world. And we were able to get China to agree to a number of substantive provisions as well as the purchasing commitments, but China hasn't lived up to that deal. And I think that's pretty clear. And so it's a matter of, will China be willing to come to the table with the second Trump administration, not only fulfilling the obligations of the first deal, but seeing if there's a possibility to take it even further. And that's going to be up to the president to see, does he want to negotiate a phase two deal, or does he just want to keep China accountable to phase one?
Where is Congress's role in all of this? Or does Trump do everything on tariffs unilaterally?
Well, as every trade lawyer knows, the tariff authority is Congress's under the U.S. Constitution, but over the past 100 years, they've delegated much of it to the executive. And so it's hard for me to see a Republican-controlled House and Senate passing legislation to push back on Trump's tariffs. I think for me, a better question is, are they going to give the president more authority, or are they going to lock in some of the China tariffs by revoking PNTR? Are they going to give the president authority to do what he's talked about in terms of a universal baseline tariff? And I think that's a question that's going to be negotiated as Congress considers the Tax Cuts and Jobs Act and some of the other major legislative priorities over the next year or two.
The way you're speaking, it definitely sounds like, especially to the business community, that some level of tariffs are here and they're here to stay for the next 4 years under this administration. What should the business community be looking out for? Because I know a lot of them are just on edge because there's no clarity yet.
Yeah, and that's the thing too, right? Like, as a former negotiator, your currency is ambiguity, which is really
it's a feature,
effective.
not a bug of Trump.
Exactly, and so it's really effective when negotiating with other trading partners, but it does give less certainty to the business community who's trying to figure out where all of this is going. But what I can say is, during the first administration, Trump landed the plane in terms of these negotiations, and so hopefully he lands it in a second administration as well. But I think for my clients, what I'm advising is make sure you know where your supply chains are, try to understand the transparency in your supply chains, where are you vulnerable, where do you have alternatives, and buckle up, because I think this is going to be a pretty interesting ride over the next couple of months and years as we see some of these negotiations unfold.
Let's end on that, buckling up. What kind of retaliatory measures do you think we can see from whether it's Canada, Mexico, or China?
Yeah, well, I think that Canada has talked pretty publicly about some of the retaliation that it intends to implement. And there, what I'd say is, I don't think that that's necessarily the most effective strategy. It's not going to get the president to back down, right? He is very focused on resolving fentanyl, resolving immigration. And I think the sooner that Canada comes to the table on that issue, the sooner that this particular trade row goes away. But certainly Canada, Mexico, and China will retaliate in the form of tariffs. There may be other types of measures that they're looking at doing. The European Union has also spent quite a bit of time looking at potential retaliation. So I think there's going to be a flare-up if some of these tariffs move forward, not just in terms of what the U.S. does, but what other countries do back to domestic exporters.
Just finally, if there's going to be retaliatory measures, at the end of the day, does Trump just want better deals to have fairer trade?
Yeah, and again, it goes down to the two purposes for tariffs, right? If you're just doing it for non-economic reasons, it's to exert pressure on other governments by using like all the tools in the U.S. toolkit. But when it comes to resolving some of these unbalanced trading relationships and the fact that the U.S. has some of the lowest tariff rates in the world, well, for the past several decades, our trading partners have maintained higher tariff rates and barriers to trade. He wants to see those tariff barriers and those tariff rates come down. And so ultimately, hopefully, that's where we land. But we'll have to see. And it's two parties at each end of the table.
Kellyanne, thank you so much for your time this morning. John, that was Kellyanne Shaw, former senior White House trade advisor. She's now at Hogan Lovells. What I find so interesting from that conversation is, of course, she says it's happening on Saturday. Trump is serious when he talks about these tariffs. And really, when it comes to Saturday's decision, it seems like it's really being driven by fixing immigration and fentanyl.
We've seen that on repeat over the past few weeks. Anne-Marie, thank you. She's taken it seriously. I'm not sure this market is just yet.
Yeah, especially because a lot of people are saying that this is just a negotiating tool. If it goes into effect, though, and you get retaliatory tariffs, just how big could the reaction be, particularly in those auto manufacturers?
We saw a hint of that yesterday with GM down and down hard, even with some decent numbers. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. It's Danny Berger. Hey, Danny. I'm going to jump in here, Danny. I believe your mic was unplugged. If we can go back to the start, I'll bring you the Bloomberg Brief. Should we do that?
Please, go ahead.
Let's do that. Okay, your first story. White House AI czar David Sachs said there is substantial evidence DeepSeek leaned on OpenAI's models to help develop its tech. In an interview with Fox, Sachs said they used a technique called distillation, where one AI uses the output of another for training purposes to develop similar abilities. OpenAI is investigating whether DeepSeek used distillation or independent research to develop its tech. Elsewhere, French spirit maker Rémy Cointreau shares are lower in European trading after the company reported a major dip in sales in the fiscal third quarter. Rémy Sales expects full-year sales to fall close to 18%, with US consumers pulling back on pricey spirits and the ongoing China downturn. Rémy will implement a wide-ranging new cost-saving plan. Analysts expect to see improvement in the fourth quarter. That stock is down 5%. Drink more cognac. Seems to be the message coming from them.
Yeah, you saw that with Moet, the same kind of Moet Hennessy coming out of LVMH, also really struggling. How much is this China? How much is it just the craft kinds of spirits?
Have you been to cognac? I've been to Hennessy.
Really?
Yeah, south of France, southeast.
You're not a drinker.
Southwest, right?
Did you actually taste anything?
I Saint-Emilion.
Or did you just sort of admire the scenery?
I was 10 years old.
Oh.
What do you think I was up to, Bramo?
I have no clue.
My dad was super into these things. At the time, I was not, okay? Elsewhere, French President Emmanuel Macron announced a major renovation and expansion of the Louvre Museum. The project, branded Louvre Renaissance, will take up to a decade and is estimated to cost over $800 million. A major change will be a private room dedicated to Leonardo da Vinci's Mona Lisa that will be accessible to viewers through a special ticket.
Okay, for those who have actually gone to the Louvre and seen what the lines are like to see the Mona Lisa, you have to wait to get into the room, and then there are all these crowds around, and so basically you start looking at the other paintings, which actually are pretty good, but it's just sort of telling how you can monetize.
How much is it going to cost to get the extra ticket, right? What's the price of that going to be?
Enough for them to actually pay for some of these renovations.
You a big fan of Paris, France?
Well, I like going to museums, you know.
Okay.
Yeah, why?
No, just intrigued. There's always Italy. Anyway, up next. Squeeze that in every single time. There was so much France and French stuff in that newsread.
Okay, so that was offensive to you?
Macron,
yeah, okay,
Rémy.
all right, fair, but you know, in fairness, Mona Lisa.
Enough of that. European diversification. Up next on the program, the Fed's first move under Trump.
The Fed, and you've heard me say this for a long time, has got to get more strategic in its approach and has got to stop being excessively data dependent.
A conversation up next, live from New York City. This is Bloomberg.
case you missed it from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Big trading day coming up. Lots of earnings after the closing bell. Microsoft, Meta, Tesla. Big Fed decision. Say major Fed decision at 2 p.m.
Cut it out.
Just trying to promo our coverage at 1:30. It's not a major decision, but we'd love to catch up with you a little bit later on. News conference at 2:30. Is it a skip? Is it a pause?
Wow, you're really selling it.
Could he consider a rate hike later on this year?
Absolutely not.
And will Donald Trump phone in?
That's also probably a no, but that would make it more
Wouldn't
interesting.
it be really interesting if someone got the text in the news conference and just read out the question?
You're basically trying to, you're leading the witness.
I know the president tunes in sometimes, so if you're listening this morning, you should do that. I can give you the number of Mike McKeon, we'll make that happen.
Oh, great.
Wouldn't that be great? The president writes in, he wants to know XYZ.
All
That's
right.
how you make this interesting.
All right, well, you're trying. You're doing a great job. Keep going.
I'm a content guy, you know. Out of surveillance this morning, the Fed's first move under Trump.
The Fed, and you've heard me say this for a long time, has got to get more strategic in its approach and has got to stop being excessively data dependent. They've been confused in their analysis, they've been confused in their communication, they've been confused in their approach. When you're data dependent and you're just looking at the future through the lens of the past, you will get more and more confused as we go through these changes.
So here's the latest this morning. The Fed expecting to announce its first interest rate decision of the year, and its new first under the new Trump administration. The consensus widely expecting a pause. The former Kansas City Fed President Esther George joins us now for more. Esther, welcome to the program. We're all looking forward to Chairman Powell a little bit later. How boring can he make this, and is that the objective later on this afternoon?
Well, I think he'd love to make it just as boring as he can, in the sense that it doesn't stir up new speculation. So we'll see. He's got a tough job.
Well, what do you think, Esther? The idea that right now markets are really concerned that the Fed might be on a path to basically hold rates here for the rest of the year. If he is asked that, how would you characterize not doing anything today, a pause or a skip? How will he answer?
Well, Lisa, I think we got a clue from the December meeting, right? The minutes have told us that there was a sense that inflation was not coming down quickly enough, that disinflationary process may have stalled out. And so for their mandate, they have to be cautious at this point, I think, and watch to see how things will unfold. The challenge for them, of course, as it is for many people today, is saying, how do you manage through this uncertainty? How do you look at the risk and the outlook ahead when you don't have clarity in the moment? And the truth is, you rarely have that clarity. may be unusually high right now in terms of uncertainty, which means you have to pivot, in my view, to thinking about the long run. And that's where I hope we hear the focus, not so much on next month's data and the next, but really where we're coming out in the long run for inflation.
Esther, there's also the added complication right now that we have a really disparate Fed, right? The different Fed members seem to be pretty split. Is this a unique feature right now? Does it seem like it is more divided than it has been when you were there or in previous administrations?
So I think there is always a diversity. That is the design of this committee. I think what creates what may sound like dissonance right now comes at what I call turning points. There are times in the economy when the decision-making is less clear, when the path ahead is less clear, and that's when you will tend to see surface in this discussion a range of views. And depending on how strong those voices are, the chairman has to bring those together because you have to make a decision. And sometimes that decision is to wait and see. And I think today is going to be one of those times.
Esther, I'd love your view on what you'd be doing. How would you balance the evolving data with expected policy changes? Where would you put the most weight?
So for me, the weight is always on thinking about the inflation because that is the most direct influence that the central bank has on its mandate. And having seen the disinflationary process slow down, we are now in a 5th year of inflation running well above the Fed's target. I would be in a position myself to say, we can wait, we should wait. The economy is performing well. We have a number of risks that are evolving here in terms of telling us what the outlook might be. And now seems a particularly good time to sit on the sidelines and wait for more clarity.
Esther, it's good to hear from you. We miss your voice on the FOMC. Esther George there, the former Kansas City Fed president, Esther George. And I would say the argument that she's put out there is probably the strongest one on the FOMC at the moment.
Yeah, the idea that you have to wait and not call it a skip or pause and just say, we don't know, we have to wait. Of course, there are going to be questions, what are you waiting for? Do you place the emphasis on inflation the same kind of way that Esther George is? And then how much has the recent decline in long-term yields actually given some breathing space to a Fed that previously was being accused of making a policy error?
This is what some of them seem to be finding difficult. How much weight you put on the data, how much weight you put on expected policy changes, some incorporating them, others not. Apparently none of them were going to do that back in November, then some did in December, and we'll see where they are in January going into March. Coming up, Binky Chadha of Deutsche Bank, Pierre Farragut of New Street Research, Glorina Urucci of T. Rowe Price, and Krishna Mamani of Lafayette College. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays Earnings on Bloomberg. Context changes everything.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture, it's about the systems, the values, the mission. You know, it's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, you know, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's, you know, and it's sometimes you look at it and you marvel and you think about, you know, how was this created? And was I the person that was behind getting this thing done?
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It'll be very interesting to see what the earnings reports are going to be like. It's not great to have the entirety of your capital in 7 names.
It really does accentuate that need for diversification.
When you have leaders in technology, they tend to stay leaders.
Big tech, you've got growth at a reasonable price. I'm not necessarily worried about the valuations here.
These big tech names, though, are not an obvious loser to me.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Trying and failing to pace myself this week, given that by the time we finished Monday, it felt like the week was over, but of course it had just started. And it continues. Later on today, we get earnings from the big tech players, Microsoft, Meta, Tesla, if Tesla's considered a big tech player. And then the big one, the Federal Reserve.
You're just crushing it.
Trying to promote the Fed here.
How are you? Okay, carry on.
The big one at 2 p.m. Eastern Time, the Federal Reserve decision. And Chairman Powell news conference 30 minutes later. Will they or won't they?
Will they or won't they speak English as they get to the podium and actually try to say nothing, because
probably,
it is going to be like completely
probably a better
boring.
question.
Yeah, I mean, honestly.
Widely expected to keep interest rates unchanged at 2 p.m. Eastern Time. Skip or pause? How will they characterize that move?
I can't look. You know, honestly, A+, to try to make it interesting at a time where Jay Powell is going to do everything in his power to make it as boring as possible and to not provoke the president to write in, just as you've asked him to do.
Vicky's tuning in. Special coverage on Bloomberg TV and radio, 1:30 Eastern Time.
Oh yeah, Vicky's really excited.
See how keen we all are for this later.
Well, look, okay.
Reserve.
First of all, it has been a long week just simply because the markets have been really exciting, but that's what we live for, so that's very exciting for us. But there is this larger question of everyone's expecting the Fed to be boring. Could it be the stealth disruptor at a time where Lisa Shallett of Morgan Stanley was talking about how ultimately the reason why multiples have not been expanding for stocks over the past couple of months has been bond yields, and they have been the main driver for broader equity valuations. So should there be something said this afternoon, it could be quite impactful.
The 10-year, the last time the Fed met on December 18th, at the close that day, was just above 450. The 10-year this morning, 452.
Yeah.
So that's what we've been up to.
Okay, all right, okay, you're crushing it. You're just trying to get us so excited for this. It's just unbelievable.
I do think, I will say this, language matters, and there is a difference between communicating a skip and communicating a pause. They mean two very different things.
I also am curious how Jay Powell communicates the dissent that seems to be growing on the FOMC. And Esther George, formerly of the Kansas Federal Reserve, was talking about how this is typical during periods of uncertainty. That said, it seems as though there is a political overtone at a time where Jay Powell's term comes up in 2026, and there are some people who are going to look through a lot of the policy proposals that we're talking about.
Go deeper, not just dissent, ambition. The ambition of some on the FOMC who would quite like to fill that seat at the Federal Reserve. How much that's going to complicate communication over the next several months as well.
Yeah, can you imagine if actually one of them just sort of came out on the podium, sat next to him? We're trying to imagine ways this could be really
the
fascinating.
ECB. It would make it more interesting if more of them came out, and you could hear from the others as well.
Or even look at their facial expressions.
I'm just saying that for Governor Waller, there's been a real change, I think, from Governor Waller. And when you speak to people, when you speak to them privately, they're much more willing to say that it sounded like an audition. Neil Dutta of Renmark basically said it in a note in the last few weeks.
There is a sense that his coming out and saying really vocally that some of the tariffs would not affect the downward trajectory of rates and that he still sees the disinflationary process well underway clearly was playing into the hands of a policy that this president has at play. That said, there are a lot of people who would agree, and it all depends on exactly how those tariffs are implemented.
We just talked about the Federal Reserve for 4 minutes, and if you're just tuning in, that's 4 times as much as we have throughout the whole program so far. Coming up, Binky Chatter of Deutsche Bank as stocks move higher ahead of the Fed. Pierre Ferragu of New Street previewing earnings from Tesla, and Lorena Urucci of T. Rowe Price counting down to the first Fed decision of 2025. We begin this hour with stocks little changed. Investors looking ahead to this afternoon, a Fed decision and earnings from Meta, Microsoft and Tesla. Binky Chatter of Deutsche Bank also keeping an eye on Trump's tariff policy, writing equity markets at record highs will be tested by more trade escalations. Equity positioning is elevated and will continue to whipsaw on trade headlines. Binky joins us now for more. Binky, good morning.
Good morning.
It's good to see you. Thanks for sitting through that. We appreciate it. Let's talk about trade. It's a key deadline this weekend. Are you expecting a change?
I think it's pretty close to 50-50. I'd put the odds of getting something big below 50. Yes, the note you read out from Friday, we did have a peak in the market last week, and the script from the last trade war was markets do well. Emboldens basically the stance on escalating on trade. Market sells off, which we also had on Monday, sort of changes the dynamic a little bit, and there's a reason for a pause.
So let's split up the two stories if we can. Can we just sit on trade just for a while longer?
Sure.
Do you think it caps multiples of the companies that are exposed to that story? And is GM a decent example? Lisa brought this up earlier. GM came out with fine numbers, but I think people found it difficult to put much weight on the outlook, given how trade dependent that might be. How does that complicate valuations going forward for those sectors?
So far, I would say in general, and going back to the note on Friday, so things moving around pretty fast. Sure. But if you take a look basically at the market down, the market recovery, I mean, basically what you're seeing is actually, the most tariff-exposed sectors actually outperform the market slightly. So they're moving with the market. So I would argue, right now, the equity market has not really priced in anything for tariffs. And that, we can debate whether that's reasonable or unreasonable. I would argue, tariffs are going to come. They're in our house economics baseline. Of course, the precise numbers, magnitude, trajectory, timing, can be different. But we have still basically, one of the highest macro forecasts from Matt Lazzetti on the street for what growth's going to do this year. So I would argue what matters for equities at the end of the day is what that does to growth. And right now, I think it's just a little bit unclear. There's not just the tariffs, but there's plenty of other things happening. I would also point out, in terms of thinking about the tariffs, there's a number of things that are pretty different this time relative to the last time. Last time around, I would argue, the tariffs were really a big surprise. This time around, it's arguably the most anticipated, most talked about policy change that's coming. And so the dynamics are going to be very different when something is a surprise and when something is anticipated.
Okay, so you've said two things here. I'm jumping in because you said that on one hand, it's not being priced in. On the other hand, it's not a surprise. So can you reconcile those two things in terms of which sectors, which have been relatively immune to concerns about tariffs, could potentially see the biggest drawdowns if we do see on February 1st, on Saturday, these tariffs implemented?
So I would add two more things before I answer your question. And what I would say is, if you talk to companies and listen to companies, and one of the reasons why things are not priced in on the tariff front is they tell you that basically, since the last trade war, we've had basically a lot of experience, courtesy the pandemic and geopolitical issues, on managing our supply chain. So I would, as we say, basically, companies say they're essentially battle ready, bring them on. I would also point out that, this is about a change in U.S. trade policy and higher tariffs. But, as one company put it, look, we have tariffs in every country and they change around all the time. We have to deal with it. So, I think there's a shock impact that the fact that the U.S. is going to do it. And I think that basically, it's diffused somewhat by being highly anticipated, not perhaps the precise, magnitudes and the direction. But I would say otherwise, I think the market's in a pretty reasonable place on the tariffs. Yeah.
What's fascinating to me is that the market might be in a reasonable place, but you also point to how high evaluations are and that people are feeling jittery, and that tariffs being announced, or say what happened over the weekend with DeepSeek and how much that rattled the tech industry, is indicative of where we are in a market cycle and the nervousness about valuations. How are you adjusting your outlook based on that, just that kind of dynamic alone?
So actually, our view for the year is that there are good reasons for why multiples have gone up, and our bottom line is multiples are likely to stay here, if not squeeze higher, is the way I would put it. Sort of a longer discussion, but I would say at least sort of 4 reasons for why multiples have gone up. One is sort of an older reason. I mean, everybody talks about 15 times as the historical average for the S&P 500. I mean, if you take a look at just the trailing multiple for the S&P 500, we really haven't spent much time below, 15 times since the late 1980s. So multiples moved up earlier, and that I would ascribe to basically inflation moving to a 2% world from what it used to be. Number 2, I would say, take a look at total payout ratios in the U.S. They used to be between 50 and 60%. At the tail end of the post-global financial crisis cycle, we ran up to 80, 85%, and we stayed there for a while. It's huge change in payout ratios. So, that's a 45% increase from 55 to 80. That's a 45% increase in the earnings that go to shareholders. And then, if you just did a quick present value calculation, it would tell you that if payout ratios go up by 45%, fair value multiples should go up by 45%.
How much of this is linked?
2 more reasons
why
multiples are.
Well, but hold on one second. Can you do it quickly?
Absolutely. So, what is trend earnings growth for the S&P 500 over the last 100 years or 90 years? It's 6.5%. But if you take, a rolling 10-year read on what earnings are doing, we're running at 9%. And when was the last time we had as high a number for rolling 10-year earnings growth? It's the second half of the 90s. And then I would say, take a look at, the risk in equities at a fundamental level comes from earnings and big drawdowns in earnings. And, those have generally been associated basically with recessions. So if you just take, the crudest metric, how long has it been since a 10% drawdown in earnings? And what you will see is that that's arguing, multiples are following that. Multiples followed that in the second half of the 90s. And so, that's why I say multiples could squeeze higher. They're pointing a lot higher. Yeah.
Binky, appreciate your time and the explanation.
Pleasure.
Got through all 3 in the end, without Bramo's interruption.
I'm sorry, I feel rude. I was getting so excited. There are a lot of ideas baked in there, and so I wanted to develop, but we don't have time.
The limits of TV. Binky Chandra, Deutsche Bank. Binky, it's good to see you. Thanks
you, sir.
for
having me.
Equity futures just rolling over. We're negative by 0.1%, a little more. We're down by close to 2 now. Let's get you an update on stories elsewhere with your Bloomberg brief. Here is Danny Berger. Hey, Danny.
Hey, John. The U.S. Navy has been instructed not to use AI from DeepSeek, according to CNBC. The Navy said DeepSeek's AI is not to be used due to potential security and ethical concerns associated with the model's origin and usage. The announcement follows the release of DeepSeek's R1 model that shot to the top of Apple's App Store after the company announced its tech rivals that of OpenAI and Meta. President Donald Trump and Elon Musk announced last night that SpaceX will retrieve true astronauts from the International Space Station, quote, as soon as possible. It's assumed that they're talking about Suni Williams and Butch Williamore, who have been living on the space station since early June. The astronauts are already scheduled to return on a SpaceX capsule in March as part of a NASA mission. The capsule for the return journey is already docked at the ISS, and NASA has not commented on any changes to the mission. You can now use the official Trump meme coin to purchase watches and sneakers. Several websites selling Trump-branded products have started to accept the coin as payment. The meme coin's total market cap reportedly exceeds $5 billion and is now being accepted by other businesses like the travel site Travala.com. And that's your brief. John.
Check it out. Danny, thank you. Thank you very much. Up next on the program, the Morning Calls Plus, Pierre Farragut of New Street Research previewing numbers from Tesla. That conversation next. This is Bloomberg.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Are you looking for vacations?
I'm just exploring Travala to understand exactly the cryptocurrency. Well, you can do cryptocurrency, but it looks like the prices are somewhat higher and it's very slow. But I just had never heard of Travala before.
Okay. And is it like Expedia?
Well, yeah, it's sort of, but it's a lot slower and it has cryptocurrency accepted in every...
What about the range of hotels? And
I can't do that much research. I'm trying.
All right.
Actually, no, it wasn't more expensive. This is how much the costs are. Geez.
More expensive?
Than I thought it was going to be. No, it is. It's just in general. Things are expensive.
Okay. Welcome. Equities look like this. I was going to say it's Biden's America, but of course it's not anymore. Equity futures down by 1/10%. Do you remember that? They'd put those stickers by the gas pumps and said Biden did this.
Yeah. Well, gas is actually really cheap now, but hotel rooms, forget it.
Not so much. Crude's lower by 0.2%. The 10-year just about unchanged. Yields down a basis point, 4.52. Let's get you some morning calls. First up, KeyBank raising its price target on Meta to $7.50, saying open source technology will drive cost savings. Your second call from Oppenheimer, downgrading Apple to perform, citing reduced iPhone sales and competition in China. That name is down by 1.2%. Earnings from them tomorrow. Big story. And finally, Wells Fargo hiking its price target on GM to 37, citing potential tariff impacts on its bottom line. Sticking with the automakers, investors bracing for Tesla earnings after the closing bell. Joining us now to discuss, Pierre Farragut of New Street Research, who recently upgraded Tesla to a buy and raised his price target to $460 from $240. Pierre, welcome to the program, sir. Let's start with the upgrade. Why the upgrade and why Monday?
So we did upgrade the stock a few weeks back.
And really our view was looking at 2025 on the auto business, what's all the news flow that gets delivered quarter after quarter on the volumes and gross margin. We don't see yet, green shots. We don't see like a recovery in demand, but we see like a situation where we're very close to the bottom. So from here, very limited downside risk. And at some point, we'll get new models. There is a new Model Y coming through right now. There will be new, like lower price point models that are going to help volumes. And at some point, pricing will ease, like the pressure that Tesla is under, like the rest of the auto industry at the moment, is going to ease. So things look relatively nice on that one. And then there is FSD 13. FSD 13 is really like a turning point in terms of self-driving capabilities. And even if we still see like many, many years before you see a very large number of robotaxis from Tesla on the road, we think this year the news flow and evolution is going to be very, very positive and is going to support the sentiment on the name. So what we're going to see this year is probably the release of the first like unsupervised version of FSD, like this idea that you can have your car driving you around and you don't need to keep an eye constantly on the road. And then the technology is probably right now to see like test fleets being deployed, and the company mentioned it in recent months, and we expect that to happen in Texas. So like this vision where Tesla becomes a company that can produce millions of robotaxi every year and really deploy them across the country and across the globe, it's still like a multi-year vision, but it's going to get more and more tangible this year. And so like the stock now is trading like maybe on 100 times earnings, which is where it has been trading when the market started really focusing on the long-term vision and saw the long-term vision becoming more and more tangible. That's really what we expect for the stock this year.
As you say, Pierre, this is the big long-term story. If we can get super near-term and just think about the last quarter and the next quarter, if I can just sit on that just for a moment, what did we learn yesterday from the likes of General Motors? What did we learn from them about how sales are developing and whether pricing power is sticking?
Yeah. So what we've heard is like the same story we've heard in the last 15 months, which is that auto demand is not recovering yet. It's still like at a very low point. And so I wouldn't be too, demanding on what to expect tonight in terms of numbers. So we know already like deliveries, they're slightly down year on year, recovering sequentially. They are like 30%, 30% above the run rate of the beginning of the year. So Tesla continues to be able, to expand even in this very difficult market condition. But that we know that there won't be any surprise. We already know the delivery numbers. What's going to be interesting, of course, is the gross margin. We do expect pressure on gross margin. It was particularly high in Q3, it benefited from a lot of tailwinds. And what we've seen in Q4 is that Tesla has still been very aggressive, very active on discounting, on promotions and things like that. And of course, this means the pressure on gross margin is still around. It's well into expectation. The key question is, can Tesla deliver 20 to 30% growth, as Elon indicated, for 2025? And on that one, I would say, if we close 2024 on a run rate that is like 30% above, 20 to 30% above where it was at the beginning of the year, we're in a good position to do that. And what we need to hear on the call to gain confidence about 2025 being a good growth year for Tesla is actually some more insights on how the new Model Y is doing and what comes next this year in terms of new models. Because remember, in auto, we are facing an extremely elastic market. If you can get into the market with lower price points, you massively, instantly expand your addressable market. And that's really what Tesla needs to deliver this year to deliver like a very strong quarter after quarter, like sequential trajectory.
So right now, Pierre, the actual numbers in terms of deliveries and sales might not matter as much as some of the longer-term story that you're talking about. Margins do matter. We are going to also be hearing from Apple and Microsoft, both of which you cover. Do you think that their earnings are going to be actually more important than even Tesla's in giving a sense of direction for the stock, but also for how they are going to invest?
Yes, I think you will have way more attention on Microsoft and Apple tonight than on Tesla for the reasons you just mentioned. You know, the market for now is wondering who's going to invest in the AI infrastructure going forward, and is like the AI infrastructure deployment still as vivid as we expect? And yes, that's going to be most of the focus of the market tonight. And of course, Tesla is deploying a lot of AI infrastructure, but it's going to be very secondary on the earnings call tonight.
Pierre, you have a neutral on Apple. You've had a neutral on Apple, a neutral rating on Apple for quite a while. What would you have to hear this afternoon to make you more bullish at a time where some people are saying that Apple actually looks like they were wise to not throw as much money into AI development at the earlier stages of adoption?
Yes, it's a good question. It's actually very difficult to be bullish on Apple at this level of valuation, simply because the laws of large number applies to the company. There isn't a bull case, re-accelerating earnings growth for Apple. So it's a very high quality company, a very high quality name, and it's reflected in the stock price. And so when you have like a maxed out multiple and very limited earnings growth potential, like single digit, maybe low double digits earnings growth potential, it's difficult to get excited about the stock. So I think my neutral rating that now is like several years, has been in place for several years, is really a rating that is waiting for like a better opportunity to get into the stock. And unfortunately, today, Apple is facing actually a bleak outlook. You see more and more downgrades from my peers, because yes, that's something we've been calling since the summer, which is that the outlook for the iPhone is not good. Like this AI evolution is actually going to be a multi-year evolution for Apple. It's not going to have like a positive impact on the momentum of the business in the near term. And so this year should be relatively weak for the iPhone, because people will wait for the next iPhone, and people the replacement activity has been quite strong in the last couple of years. So I would expect a bleak outlook, and maybe the stock reacts negatively to that and creates an opportunity actually to buy a very high quality stable name. But that's really valuation that is an issue for me here.
Not trading with the valuation that you like. Pierre, thank you, sir. Pierre Farago there of New Street Research on Apple. Apple and Tesla similar in one way. The core business is not seeing any growth. The difference is that Tesla has got this grand vision of the future that Apple right now doesn't have.
Although some people are saying that they benefited from not investing as much in some of the chips in the data centers, if what we saw is true.
Up next on the program, a sprinkle of economic data from New York. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
60 minutes away from the opening bow with equity futures on the S&P down by 0.25%, just a little bit softer. In the bond market, 2-year, 10-year, 30-year shaping up as follows. Going into some economic data in just a moment, and of course the Federal Reserve decision later on this afternoon. The 10-year at 451.83, very close to where it was at the close the last time the Fed met on December 18th. The 2-year opened up that day at 424. The 2-year right now 418.87. With that data and looking ahead to that Federal Reserve decision, here's Mike McKee. Good morning, Mike.
Good morning, John. Well, we're calling this one number to rule them all. We haven't talked much about trade in recent years, but since it's the way Donald Trump keeps score, let's take a look at the advanced goods trade balance that just came out, negative $122 billion. That is far, far higher than the previous $102 billion, and certainly way above the 105 that was forecast. Now, this does not include services. We'll get the total trade balance next Wednesday, but we are starting off on a bad foot here. These are December numbers. It comes into the Trump administration with the trade deficit widening, and he's definitely not going to like that, and that will probably feed into whatever happens this weekend.
Mike, how much of that is just front-loading orders ahead of potential tariffs?
That is a very good point. A lot of people have suggested that perhaps that's what companies were doing, trying to stock up. And there are folks, Joanne Chu at the University of Michigan says when they have called people for their survey, Americans have said they've wanted to buy things like cars and refrigerators ahead of time because they're afraid prices are going to go up. So we're going to have to watch that as a possibility and see if once we get to the January numbers, that comes back a little bit.
Mike, thank you, sir. Stay close. Mike McKee, of course, down in Washington today because Mike McKee will be in that news conference for the Federal Reserve a little bit later on this afternoon. We expected some front-loading, didn't we? Seems like we're getting a bit of it.
What's interesting to me, and I don't know much sort of insight into exactly why, but I'd love Mike's thoughts later on about the wholesale inventories actually fell, and they were expected to rise. So if they're stockpiling, it's not showing up in inventories, which is interesting to me. How much are we actually seeing stockpiling versus how much are people buying ahead of any potential tariffs, given that it is sort of filtering into the zeitgeist?
I think Mike's still there. Do you want to ask him?
Yeah, I do. Mike, what do you make of that? If you could tell us about the idea of wholesale inventories declining by 0.5%, even though they were expected to increase. If we actually saw stockpiling, wouldn't we expect that to go up?
Well, we would, and that's an interesting question. It's a little hard to pull out wholesale inventories and retail inventories also out this morning showing a decline because of the holiday season. It is possible stuff came in and went back, right out the door, and we don't know exactly the composition of that yet. But I'll look into it and see if we get enough of a breakdown to be able to tell.
Mike McKee, thank you, sir. We'll throw these questions at someone else and see if we can get an answer. Lorena Urucci of T. Rowe Price. Economists are all the same, aren't they? One hand this, the hand that. Lorena, we want answers. How do you explain the data from a few minutes ago?
I
I would go back to the U.S. consumer because we're not seeing any evidence in the Q4 GDP tracking data that we have an inventory buildup. When you look at the contributions there, inventories are actually the only component that is a drag to growth in the fourth quarter. So I think the trade data are basically telling you strong consumer spending in goods, and we do indeed import most of that. So I haven't seen evidence in the data yet of stockpiling. That doesn't mean that there's not going to be some bringing forward of spending by companies there, but it's not in the Q4 data.
Well, Blurina, just to sort of broaden
we go back to the consumer and the labor market that is supporting that spending.
Blurina, just to sort of broaden that out, there has been this sort of push-pull about whether we're reaccelerating or actually seeing some sort of weakening in the overall economy that will lead the Fed to keep cutting through the remainder of the year. Yesterday, we saw consumer confidence take a hit. It came in much lower than expected. There has been this increase in expectations of job insecurity. Blurina, do you reject that? Do you sort of focus on the consumer and consumer spending as being the more dominant tell of the strength of the U.S. economy?
I have to say I remain quite positive about the U.S. economy. We are seeing some signs of loosening in the labor market and deceleration in growth. I think growth in 25 is going to be slower than last year, but it's not going to be weak. Employment growth is solid. There is job security, no signs of mass layoffs there that would make workers worry about the outlook of employment. Of course, we're hearing now about federal government employment, but the majority of employment in the economy is provided by the private sector. So I think we still have a strong economy, and I don't see, even though there may be some wobbles in terms of consumer confidence, I don't see consumers really holding back so far.
Blurina, how much, when we talk about the pause or the skip, which is going to be the exciting moment of the news conference later today with the Federal Reserve, will they indicate this is just a break in a downward path of rates, or potentially this is it? What are you looking for in terms of where the emphasis is, and where would you land in terms of that debate?
So I expect to learn nothing from this press conference, and I think that would be a measure of success for Powell, that he doesn't give anything away. And so what that does is to leave us watching the data. So when the Fed started cutting interest rates back in September 2024, they were really worried about the labor market cooling rapidly, the unemployment rate increasing. What we've seen since then is a pickup in employment growth and a decline in the unemployment rate. So that reason that pushed them to cut by 50 basis points in September last year seems to have moved in the opposite direction. Now, maybe they want to take credit that they helped stabilize the labor market by easing policy and financial conditions, or maybe there is underlying strength here and the data over the summer was just a bit noisy. We'll see. But I think essentially now the only reason that the Fed might have for cutting interest rates is this idea that where we are right now, monetary policy is restrictive, and we want to gradually move towards being neutral, because you don't want to stay restrictive for too long, especially with inflation coming down quite significantly from the 2022 levels. Now, the problem here is if the economy is not weakening and progress on inflation is relatively slow, what's the rush? So I think that leaves me with the Fed is wanting to cut interest rates. It has a dovish bias, but the economic developments don't support it to cut interest rates in the near term. And then we have all the policy uncertainty coming from the new administration. So I have to keep an easing bias in my rate forecast, but I'm thinking at the earliest interest rate cuts will come in the second half of this year.
Manchester City versus Club Brugge at 3 p.m. Eastern Time, if you're interested. Okay.
Yeah, you know,
watch the build up to the game
I love
as well.
It. Okay,
News
can I
conference
just
starts.
say, you start the show, we're so excited. It's going to be an incredibly important Fed decision. Just wait. And we have gotten so beaten down in 37 minutes.
Hold on a minute. I don't think I ever said that.
You did. You sounded excited.
If I said that was
Pure
very
sarcasm.
disingenuous.
Oh, I know, but you did.
I'm sure
but
everyone could feel the sarcasm.
4 minutes we spent talking about it.
Yeah, 4 minutes too many. Blurina, thank you. Lorena Urucci there of T. Rowe Price.
Thank you for having me.
No one thought I was being serious.
I did.
You thought I was being serious.
I took you so seriously.
You thought I think this is a big Federal Reserve decision.
I think you're really excited for it.
Look, I think with Chairman Powell, he's capable of anything, and he could flub this one too.
Well, that would sort of be his to flub, because as everyone's been saying, it's expected to be incredibly boring, and that would be the successful way for this news conference.
We can set up a screen over here. I can log into my Paramount account, and we'll make it happen.
You're going to be watching.
Yes.
You're going to be watching football.
2 screens.
2 screens.
Chairman Powell, bit of football at the same time.
This is quite the promo.
Mike McKee can't do that. He'll be in the room. Mike McKee, for Chairman Powell today, it feels like a non-decision, no decision to make. They're not going to cut interest rates. They're certainly not going to hike. What do you expect them to do?
What time does the football game start, John?
3 p.m. Eastern time.
we might watch it in the briefing room. I don't expect him to do much of anything. I think everybody's been telling you that today, that the Fed wants to get in and out of this without making any news. There's enough going on. The Fed has enough headaches without provoking the president even more. You know Jay Powell's going to be asked about it, but he'll probably dodge that question. The only thing that markets might get out of this, or that they're really looking for, is any kind of hint about what might happen in March, and I suspect we'll miss that too. There is one area in which they could make news, and that's the Fed balance sheet. They're expected to stop QT sometime this year, and they haven't given any clues to anybody about how and when. So with nothing else on the agenda, they might be able to put something out on that today. We'll take a look for that, and that might be the best that you get, unless the football game's exciting.
It will be. Mike McKee, thank you. If they lose, if they don't win, you know, they go out the Champions League. This is a big deal. Manchester City.
I'm going to be looking at the balance sheet.
And not Manchester City
of course.
And the future of Pep Guardiola.
Yeah,
okay.
Well.
Krishna Ramani follows the Fed very closely. Joins us now from Lafayette College. Krishna, it's good to see you.
Good to see you as well.
Can you make this afternoon interesting?
Well, no, I mean, if you think about it from the Fed's perspective, everything is kind of working out according to plan, the way they laid out the plan in the last meeting. And nothing has really changed, which is growth is really good, and the inflation is coming down, but at a very slow or much slower pace than they would probably like. But they are worried about the labor market and don't want to cancel that optionality. What they're not worried about is significant pickup in inflation and therefore the need to tighten. I think that is really the one point. If I can see anything come out, that probably would be one point.
So skip or prolonged pause sounds like skip for you.
Absolutely, skip is the right way to think about it, because you know, anecdotally you can come up with a lot of talk about labor market softening. But it really, at the aggregate level, it really isn't. So they want to cut, but they don't have the opportunity to cut, and that's where we are.
So you expect them, and Krishna, this would actually be real news, you expect them to completely remove the possibility of an additional rate hike from the table at a time where some people are saying that could potentially be the big issue later this year.
So what I would say is that they would never kind of take it out altogether.
But carry on.
But I think if there is some tamping down to be done, it probably is on that front, so that people don't expect that they are on a pause for a very, very long period of time with the possibility of rates going up. That doesn't really serve their purpose, because they are focused on the labor market. They're not seeing the weakening, but they're worried about that weakening.
So it seems like we can't really get forward guidance at a time where the Fed is not in the pole position when it comes to understanding the trajectory of inflation or when it comes to policy. So how potentially disruptive could they be if they take a decision that is counter to what the markets basically are implying?
Well, so I don't think they can be very disruptive. The markets today are being driven by other things other than the Fed. Fed is, of course, a larger context in the market, but I think what you're dealing with right now is what happens in the equity market with AI and other stuff. And that thinking is dominating everything, and that is probably going to be with us for a while. So, you know, if you think about it from a market convexity standpoint, the convexity profile is highly negative. That is, the upside is broken because of the break in the narrative, and the downside is quite significant. So if bonds move a lot, it wouldn't be because of fundamental data, it'll be because equity markets have corrected a lot, or the Fed said something. Or it wouldn't be because of the Fed said something. It's going to be driven by what happens in equities, the way it happened on earlier this week. I think that is going to be the driver rather than the Fed or even earnings for that matter.
I've known you a long time, and over the last decade since I've been in this country, when we have these turning points in markets, I've sat down for lunch with you and you've gone through what's about to happen. I have to say, your track record, in my experience, has been absolutely phenomenal on that front. Do you believe that was a big turning point for equities on Monday?
Oh, absolutely, absolutely. So again, people make it out of, well, AI is still going to progress and the cost has come down. It's none of that. I mean, all of that is still very much in place. The fact that DeepSeek can come up with a lower cost model doesn't change the overall fundamentals. What it changes is your valuation thinking. That is the super premium that you were willing to pay because you think you thought that it could run even more. That is what you're questioning. And therefore, I think it's not because any technological development. It's really more about market sentiment and how they feel about paying 100 times or whatever on various stocks that they're willing to pay based on a certain narrative.
You say various stocks. Do you mean the whole universe of equities, or do you mean certain pieces of the AI story? Is it the energy piece of the story? What is it?
I think there's a lot of stuff that went up on the back of AI. Energy, quantum computing, cash flow producing entities, the downside on them is much less. On the other hand, anything that was based on capital spending on the back of the AI wave, I think you have to question that. It's not that Meta is going to become less profitable. They are hugely profitable and they can generate good earnings, but kind of speccing on quantum computing, expecting or data centers and the demand for electricity and nuclear producers and things like that, those are the sort of things that we have to question.
How much did you shift some of the allocations that you have as a result of that potential tipping point, that nuance in the AI adoption cycle?
Well, so, we didn't shift much because we never loaded it earlier. So, it was, what we did was not rebalance the portfolio and let the equity market run. What we are thinking about now is to rebalance the portfolio on a consistent basis, far more than what we would have thought earlier, because now it is about risk management. It's about protecting your downside because, as I said, the convexity profile is very negative at the moment.
You said something else that I thought was instructive, that the bond market's going to move more responding to earnings than it will to the Fed. What do you think could happen, and what's your interpretation of the fact that bond yields went down on Monday? Is it the idea that potentially broader adoption of AI would be disinflationary? Is it just a risk-off trade that bonds now have the same relationship as they used to have pre-pandemic?
Well, so I don't want to kind of oversell that particular idea. I think the fact that bonds only went down 10 points when NVIDIA lost $500 billion sort of gives you an idea as to the magnitude of that particular. I mean, bonds have headwinds too, it's not that they're free. When you have 3% growth rate, expecting 10-year to get to 3.5%, I think it becomes very, 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 very challenging. But the point, however, that I would like to make is, if one, don't have a view. That is really not helping you at the moment. And second, if you have a view on the downside on bonds rather than upside on equities. That's how I would kind of characterize it.
So take a view right now. Do you remember Bloomberg real yield? Rapid fire at the end. 450 right now on 10s. What do we hit first? 4 or 5?
Oh, 4 rather than 5.
4 rather than 5?
Yeah.
Krishna, appreciate it. It's good to see you. Thank you.
you.
It's a lot locked into that answer about where you think this market's going, right?
I love it. You really you miss it. We should do rapid fire.
But honestly, it's too much, Brahma.
Yeah, but I know, I hear you, but you could have said 4.4 or 4.75.
No,
that would have been
stretch out.
I know you want to make it that much bigger, but
sure.
We were talking.
All right, okay. Can we move on? We good? It's good to see you, mate. As always, thank you. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg brief with Danny Berger. Hey, Danny.
Hey, John. Bloomberg has learned that Microsoft and OpenAI are investigating whether Chinese AI startup DeepSeek obtained unauthorized data output from OpenAI technology. Sources say that Microsoft had observed individuals that they think might be linked to DeepSeek taking a large amount of data using the OpenAI API. Earlier, the White House AI chief, David Sachs, told Fox News that there was evidence DeepSeek had leaned on the output of OpenAI's models to help develop its own tech. Bloomberg has also learned that Apple has been secretly working with SpaceX and T-Mobile to add support for the Starlink network in its latest iPhone software. In an under-the-radar move, the smartphone's latest software update released this week now supports the technology. The initial version of Starlink is exclusively for texting, but SpaceX and T-Mobile had previously said that they plan to expand into data connections and voice calls in the future. Novo Nordisk's popular weight loss drug, Ozempic, has been approved by the FDA to treat chronic kidney disease in patients with type 2 diabetes. Studies have shown that Ozempic can reduce the risk of death in patients with kidney disease caused by diabetes. Novo Nordisk shares, for their part, are getting a slight boost, 0.7% in the Denmark trade. And that's your brief. John.
Hey, Danny, thank you. Thanks for this morning. Up next on the programme, we'll set you up for the trading day. We'll catch up with Manus Cranny, get you some movers, and then we'll head down to Washington, D.C. to catch up with Anne-Marie on the Federal Reserve, because the politics of this could be more interesting than the decision itself. That conversation up next.
Is the Vivian Tom clientele?
Yeah, power women, like the dragon. Dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful woman's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Equities just negative by 1/3 on the Nasdaq. We're just about unchanged on the S&P 500 with some morning movers. It's Manus Cranny. Hey, Manus.
Jonathan, let me just give you something pretty spectacular. This is DJT, up 16%. They have developed their financial services strategy in conjunction with Charles Schwab. Yesterday was X and Visa. Today it is DJT. It's about putting $250 million into a fund. It's going to be a new company called Truth FI. It's about America First, about the capacity to invest in vehicles, ETFs. managed accounts along with crypto. I mean, look, this just reminds me of the Apple Pay moment from many, many years ago when people were trying to understand what's Apple doing? Why do they want to get into financial services? This is the wallet that everybody is going after. Alibaba, let's just give you a snapshot of this. Your lexicon's going to have to expand. Names are going to have to be learned a little bit more about. This is Alibaba delivering an upgrade to their AI, a superior model to that of DeepSeek. This story is now not about China versus the United States of America. This is about open source versus closed source, up 3% and change. Jonathan.
Manus Cranny, nice work. One to watch. Going into the opening bout. Lots of data and lots of earnings through the week as well. Lots of central bank decisions. At 2 p.m, Fed rate decision followed by a Fed chair J. Powell news conference at 2:30, plus earnings from Microsoft, Meta and Tesla. Thursday, an ECB rate decision, jobless claims and results from Apple and Intel. Friday, PCE. Saturday, President Trump's tariff deadline. Let's head down to Washington, D.C. and catch up with Anne-Marie. AMH, we all want to know, when we get this decision and the news conference starts, will the tweeting, will the posts begin on X from the President of the United States?
Potentially, and if history is any guide, we could see that as Jay Powell has his first press conference today under Trump 2.0. Remember in 2019 when he didn't lower rates, Donald Trump blasted Powell and said potentially the chair of the Fed was even a bigger enemy than Xi Jinping. Here is what we know already that President Trump has said. This is really a commander-in-chief who thinks he should be a Fed chair. I think I know interest rates much better than they do, and I think I know them certainly much better than the one who's primarily in charge of making that decision, a.k.a. Jay Powell. I'd like to see interest rates come down, quote, a lot. We know where his mind is. We know that the Fed's not going to deliver where his mind is, so you can expect there's likely going to be some tension today.
Anne-Marie, I think a lot of people are expecting that. He's a real estate guy. What do we expect? He wants rates to be lower. Anne-Marie, going forward to Saturday, what are we looking for to know how real this is and what this says about the path ahead in terms of tariffs?
So this is really a self-imposed deadline. Trump kind of threw it out there when he was briefing the press last week, but Caroline Leavitt, the new press secretary, had her first briefing yesterday with reporters and said that's still in the books, February 1st, when it comes to China and Mexico. I thought my conversation earlier was telling with Kellyanne Shaw, who was in the room, who negotiated phase 1 trade deal with China. And she says, I believe these are real, especially on Canada and Mexico, because Trump is really taking this, what he calls America First agenda. And when it comes to Canada and Mexico, a lot of this has to do with immigration and fentanyl coming through the border. What is more telling and interesting, potentially we'll learn from this weekend, whether or not these tariffs come or not, is China included. He has talked about 10% on China. Regardless if we get them all this weekend or not, there is a memorandum looking into things even like currency manipulation, trade deficits, who is playing fair rules when it comes to trade for April 1st. And his entire team is yet to be in place. So the direction of travel is very clear. I just think the timeline is a little bit more murky, and he has been more ambiguous on places like China.
Anne-Marie, appreciate it. More from AMH through the week from Washington, D.C. Coming up a little bit later, join Lisa at 1:30 Eastern Time. Very excited about this.
Because it's going to be an awesome lineup, and it's going to be an awesome press conference. The Fed decides. Surveillance special.
Mohammed Al-Arian, Bob Michael, Diane Swong, Jeff Rosenberg, and more.
And Jonathan Farrow.
Maybe. This was Bloomberg Surveillance. This is Bloomberg TV.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
what's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No. Myself, 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race and Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
Its own bank.
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Fed Day is finally here and futures down a little bit in anticipation. 30 minutes until the start of trading. I'm Katie Greifeld.
And I'm Shonali Bassick. Matt Miller is off today and Bloomberg Open Interest starts right now.
Coming up, it's the first Fed decision of 2025. A pause is expected as Chair Powell gears up for a presser with politics on the agenda. Defending America's tech dominance, Microsoft, Meta, and Tesla kick off the Mag 7 earnings parade just days after DeepSeek rattled Silicon Valley, Wall Street, and Washington. Plus, T-Mobile posts a big beat amid news that it's been secretly working with Apple and SpaceX to add Starlink access to iPhones. Details ahead on that Bloomberg scoop, but let's take a look at where these markets are trading. Of course, we have Chair Powell. We have the big tech earnings coming this afternoon. Where we sit right now on the S&P 500, a little bit lower in pre-market, trading down about 0.2%. The NASDAQ 100 trying to hang on to its pre-market gains, currently up about 0.1%. We had that big rebound yesterday, but Monday's session certainly left a dent in the overall week. We'll see how it changes over the next 48 hours or so with those earnings. And then you take a look at the bond market here. This is what you should keep an eye on over the next day or so, because the 10-year Treasury yield just about back at 4.5%, currently lower by almost 2 basis points. It's hard to say where the next 10 basis points of direction will come from.
What's the over-under here for you? Because you think we break below 450 today?
I'm not a betting man. I can't say, but we'll ask a lot of smart people.
I'd put money on it, but I'm not telling you what I'm doing. Anyway, some stocks we're watching. T-Mobile had added more customers in the fourth quarter than expected, and its forecast for net customers also beat the average analyst estimate. We're going to talk more about T-Mobile in a moment. The shares are up about 7% pre-market. ASML, also a big story this morning, up about 5.8%. It's rising the most in 5 years as the AI boom fuels demand for its chip-making machines. We're going to expect to hear much more about CapEx from big AI names tonight. That includes Microsoft, which is investigating whether a group linked to Chinese AI startup DeepSeek obtained data from OpenAI's technology without authorization. We're going to talk more about that as well. Microsoft, though, down about 0.2% pre-market. Also checking on shares of Trump Media, which announced its plans to offer financial services on Truth Social platforms. That will include ETFs, separately managed accounts and crypto. You have Trump Media and Technology. DJT is the ticker, up almost 13% pre-market, Katie. This is quite a new area for that stock.
Yeah, absolutely. Just absolutely flying shares of DJT. And I wanted to take a look at the overall leaderboard right now when it comes to the sector level, because like the Fed, we're kind of in wait and see mode right now. All of the catalysts coming up in the afternoon. But if you take a look at the year-to-date performance, you can see where this week left a mark, because the only sector that is lower year-to-date is tech. You can see just down about 0.5%. Up at the top is communication services, where you have names such as Meta, such as Tesla. But in traditional tech, we have Microsoft and Apple, both of which reporting in the next couple of days. Microsoft specifically after the bell today. So this leaderboard could change drastically over the next 48 hours, of course, as we get the earnings, and also maybe a little bit of detail from the executives about how they're thinking about that DeepSeek shockwave that really rattled every part of markets.
Absolutely, especially because it came right after that Meta announcement on CapEx. But we should say Meta is really the leader in that leaderboard of the Mag 7, up 15% this year. Of the Mag 7, pretty weak performance so far. They're up less than 4%. Apple down almost 5%, but you even brought in beyond that. You have even worse performance this year. Broadcom, Dell, Super Micro has been always volatile. Advanced Micro Devices, kind of everywhere you look, there's a lot.
Absolutely. Yeah.
Anyways, we're going to go switch now because investors are awaiting clues from future moves from Fed Chair Jay Powell's news conference this afternoon. Busy afternoon, tech earnings and the Fed. We're going to bring you a preview now. Michael McKee, Bloomberg's Chief International Economics and Policy Correspondent, joining us from Washington. Missed you this morning. Looking forward to seeing what you see later today. What is the first question on your slate?
Well, the first question will probably be what everybody's first question is: what does this mean for March? Because if you're expecting some news today, you're probably going to be disappointed. We've seen the markets turn around on their views of what the Fed is going to do. Last December, when they said they were going to do 2 rate cuts, you can see the red lines there show that the markets priced in rate cuts starting as early as March. But right now, we're looking for not even 2 cuts this year. The yellow lines show that the markets think the Fed is on hold. Now, this changes all the time. If you're in the markets, you know that. And it's probably going to change a little bit again today, but there's no movement today expected from the Fed. And since there's still a lot of uncertainty about what Jay Powell is going to say and what the president is going to do, I don't think we're going to see the Fed go out on a limb. This is the balance sheet. If they go out on a limb in anything, guys, they might announce the end of QT or tell people when it might be coming, because there's nothing else going on today and they haven't really talked about it. There's some feeling in the markets it's about time for them to do that. It's a possibility. We don't know that that's going to happen. It'll make a difference to people on bond trading desks, but it won't make a difference in what people think of in terms of the Fed cutting rates again.
Absolutely, yeah. A lot of bond traders would love some clarity there on the balance sheet plans. Mike McKee will be speaking to you throughout the day. That is Bloomberg's Michael McKee joining us from Washington. And let's broaden out this conversation now, because sitting with us at the desk, I'm pleased to say we have Citi Global Head of Research, Lucy Baldwin. Lucy, great to see you in person.
Great, thanks for having me.
So we have these dueling catalysts this afternoon, right? And I'm curious for what matters more for you at this juncture, whether it's what we hear from the Fed starting at 2 p.m. or whether it's what we hear from the likes of Microsoft and Meta after the bell today.
Well, look, I think today the Fed is probably going to want to keep this as boring as possible, right? In many ways. I think, as your colleague Michael was saying, I think the expectation is that this is really going to be a quiet event. Yes, they might be asked lots of questions around what's happening in terms of inflation, or whether the impact of the last few days in terms of DeepSeek and the impact of AI is going to have any implications for monetary policy. But I think relatively our view would be today is going to be a much quieter Fed. Now, that said, we are in the camp that you are still going to see rate cuts later in the year, and we do think the inflation picture does give the Fed scope to move probably at least 3 cuts from here this year, so more than the market is pricing in. Our US economics team actually think that over the next few months you will start to see more weakness come through in that labour market, so we've actually got slightly more cuts priced in. However, I don't think we're going to get a lot of news on that today, so I think what is far more important is going to be these earnings, and I think given everything that have happened in equity markets in the last few days, that's going to be critical, and particularly the narrative around CapEx spending and and really the outlook for the Mag 7 to continue to deliver this beat and raise that we saw so much during last year, which of course delivered such a strong performance for that group of stocks and then the broader market.
You know, it's interesting. I wasn't here the last 2 days. I had serious FOMO because you saw what happened Monday. You saw the jump back in NVIDIA yesterday. We didn't recoup everything that was lost.
Still down about 9%.
Absolutely. And if you think about the future prospects here, what do you want to hear from those big tech names in terms of CapEx? And then what then is the ripple effect in terms of what you can see in the broader markets, given you do have that drag that Katie was talking about in the tech industry right now?
Yeah, and I think when you look at the context, right, we've come into this year after 2 years, back-to-back 20% plus returns, right, heavily driven by a very small concentrated group of names. And so we have been saying to people, like, diversify, don't leave yourself too exposed to that narrative. Now, the irony is we also have been saying that actually to investors, the health of that Mag 7 has looked fairly good, right, in terms of the outlook. You know, if you look at PEG ratios, they don't look particularly extended. And they were the group of stocks that continued to outperform and deliver last year, whereas actually the 493, you know, were the group that really delivered slightly less good earnings. And so I think everybody's going to be focused today on if there's any sense of pulling back in some of those CapEx plans, because to your point, we've seen so much, you know, CapEx momentum building. And that was, of course, what was going to underpin and deliver that strong growth of earnings as we go forward. Now, for us, we feel if there is any sense that the Mag 7 aren't able to maintain that beat and raise dynamic with that higher base of expectations this year, that is going to add fuel to the fire around this broadening out thesis in not just the US equity market, but also people looking for cyclical diversifiers to perhaps pair with their US long positions elsewhere in the world. And that could be Europe, it could maybe even be China in some situations, particularly, of course, given the excitement around the China news.
Well, I want to continue the point that you're making on big tech, because for a lot of people, big tech had turned into their haven play. They, of course, were getting the share price performance in spades, but also it was seen as this quality haven sort of asset, this macro agnostic sort of sector here. That seems to have hit a speed bump, that narrative. And something that's interesting this week is just the bid that we've seen into bonds. And where we're standing right now, how are you thinking about the bond market? And it seems to have returned a little bit to being a safety trade.
Yeah, it's a good point, because as you say, for a long period of time, 60-40 wasn't working, and then we got the sort of back end of last year, we started to see, obviously, huge bond market volatility, but we've started to see that diversification nature of the bond market come back to the fore, and more people obviously being aware that high quality fixed income investments can be that great portfolio diversifier. And from our perspective, you know, although we're very much still overweight equities, we are this year much more aware that you need to have that allocation to fixed income markets as well in your portfolio, as well as other diversifiers, you know, things like safe haven currencies, which we'd still say is probably the dollar, and also things like gold.
So want to talk a little bit more about what we're seeing in the equity market versus fixed income markets. This chart that we're looking at right here was shared this morning by Torsten Slok over at Apollo, and you can see that even with what we saw this week in terms of the NVIDIA sell-off, the broader tech sell-off because of it, you do still see the top 10 companies, of course the Magnificent 7 leading the way there, still almost 40% of the market cap here of the S&P 500. How much of a problem is that to you?
Well, I think it's in and of itself isn't a huge problem as long as the fundamentals of those stocks continues to deliver, right? And I think, you know, when we look at it, you know, we talked about this expectation of 20% growth for that group of stocks this year. In contrast, the other 493 have got sort of 10 to 12% worth of growth priced in this year. But of course, they haven't had a history of outperforming. And so they really do need to come through and deliver, right? And so when we think about our target for the S&P this year, we've got a 6,500 base case, we've got a 6,900 bull case, but we have a 5,100 bear case. So there is asymmetric downside risk to the way we're looking at well.
Yeah, broad range there.
It's a pretty broad range, but ultimately to get to 6,900, you really need to see, you know, upgrades around all of those numbers, the 493 and the Magnificent 7. But I think, you know, within that group, we do see a very strong fundamental setup for all of those names still. And we don't think that the news that we've seen with DeepSeek really changes that. We think, if anything, it's going to broaden out the AI trade, broaden out the excitement and the growth potential for some stocks away from the very classic AI names, the infrastructure names, the hyperscalers and the power names, which, you know, clearly we're now starting to question whether some of those areas were a little overextended and are at risk of seeing some slowing momentum nearer term.
Maybe we'll get some answers to those questions tonight when we hear from some of these CEOs. Lucy, it's great to see you. That, of course, is Lucy Baldwin of Citi. And as we've been discussing, a huge day for earnings today with more than $7 trillion worth of companies from the Magnificent Seven reporting. Here with more is Jess Menton.
Happy Fed Day, guys. And of course, as you were just mentioning, Katie, we still have big tech stocks coming after the bell with those results, Meta and Microsoft leading the way here. And it's important because Meta stock actually up about 15% year to date, performing the best out of the Mag 7 cohort. But if you look over at Microsoft, some of those concerns about whether or not it overly spent on that type of AI demand, up about 6% year to date. So that's going to be important because right now Citi's estimating that options traders are betting the swing that we're going to see tomorrow on the back of those earnings after the bell today is about 0.8% swing for the S&P 500 in either direction tomorrow. That's going to be key. Another stock I'm keeping a close eye on that is also reporting after the bell today is Tesla. So if you look at the implied move, one-day move after it reports its earnings, it's about over 7% swing. If you look over the last 8 quarters, it's much higher than that because in that span over the last 2 years, the average one-day implied move has been around 4.5%. Of course, the bar is high because that stock has doubled in value since its last earnings report. Of course, we know it is an EV maker, but it's trying to transition to AI. So especially what the company is saying when it comes to those self-driving vehicles, even though we know the Trump administration is lessening some of that demand for some of those tax break for EV makers, and especially people that are trying to get some of those tax credits. Of course, this company is trying to move in another direction with AI. And then lastly, have to mention ASML and what we saw with its stock performance in Amsterdam, rising as much as 12%. So that is its best day since 2020. The U.S. listed shares are also moving higher today. So you saw the bookings actually more than twice as much as analysts were expecting. And also, if you're looking over at where NVIDIA is trading in pre-market, it is lower, but of course it bounced back yesterday, was up about 9% after we saw it lose nearly $600 billion in value on Monday. So actually added close to about 260 yesterday. So not as much as we still need to see a bigger bounce back for NVIDIA, but of course that's going to be something key when you think about Meta and Microsoft, also big spenders when it comes to those customers for NVIDIA, guys.
Jess, thank you so much. Looking forward to your coverage of what happens later today. Of course, a lot setting up for potentially messy trade. We'll see how it goes. Now, coming up, strong subscriber growth powers T-Mobile's fourth quarter as it makes plans to bring Starlink to Apple phones. That's really a big story. We're going to take a look at the wireless giant next. Shares up. Stick with us. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
In case you missed it, on Bloomberg Technology.
We're excited to really change the expectations for space companies where you have this always-on, reliable, and frankly dynamic satellite connectivity that you would expect of your power grid or of your cell phones. And so we think that this is a huge opportunity space, and our first contribution to it is through shared infrastructure.
You can see this whole ecosystem developing, and you have an exponential growth right now because
easier access to space means more demand for space, and that's the definition of an exponential growth function. So if you think about someone like Varda, who is only possible now because access to space is cheaper and easier, we're demanding more access to space.
I think that's what's so exciting from a business perspective, the fact that if you can do it, you're one of a few numbers of organizations in the history who've actually pulled it off. And so it creates a very defensible position, because again, space is very, very hard.
Don't miss Bloomberg Technology live every weekday.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
And now to high interest, a look at what's making headlines around the world. U.S. AI firms are staying alert amid DeepSeek's debut of its latest model. Microsoft and OpenAI are said to be investigating whether DeepSeek obtained unauthorized data output from OpenAI's technology to train the new R1 model. Bloomberg sources reveal that security researchers from Microsoft observed a large transfer of data in fall by individuals they believe may be linked to the Chinese AI lab. And Henry Schein shares are rising on the news that KKR has taken a 12% stake in the medical supplier. The private equity giant will become the firm's largest non-index fund shareholder and plans to work with the company to improve operations. 2 KKR representatives will join the board, and a new independent director will be appointed. And LVMH shares sliding. The luxury house's fashion and leather goods sales declined 1% in its fourth quarter, casting some doubts in a quick recovery in luxury. Despite declines, though, Tiffany sales were up, and Louis Vuitton had a strong start this year with double-digit growth. CEO Bernard Arnault said he predicts a booming U.S. market. Katie, I would like to be buying one of those Stella McCartney bags, but they say that might be a business that they might be exiting from. Let's see that.
Yeah, we'll have to keep an eye on that one. A lot of interesting news out of the luxury space recently, but let's switch gears here because we have to talk about T-Mobile stock right now, really charging higher in the pre-market, currently up about almost 8%, because not only did the company report strong subscriber growth this morning, but Bloomberg also reporting that it's working with Apple and SpaceX to add support for the Starlink network. Joining us now with more is John Butler of Bloomberg Intelligence. And let's start with, of course, the beat when it comes to monthly phone customers. They added over 900,000 in the prior period. The expectation on Wall Street had been for about 865,000. Where are these new customers coming from? Where are we seeing that growth being fueled?
So thanks for having me, Katie, and great question. So I think one of the areas where T-Mobile's doing very well is they're tapping into smaller markets. When you think about the brand, their initial splash was all in these top 100 markets in the U.S. They tend to under-index or have a lower share in markets outside the top 100. So that's a big source for them. They're also moving very heavily into the business mobility market, and they're executing well there. So I think those two areas have been a big source of growth for them. And of course, they have a very strong brand in wireless. It's really resonating well. So I think as people get shaken, leave other brands and you get share just from switching activity, I think T-Mobile does a very good job of picking up people in an environment like that.
You know, aside from earnings, of course, there is this Apple Starlink news that involves T-Mobile as well. This optionality here to be more connected to Starlink. Of course, a lot of people have a lot of fascination about how far this will go. What role does T-Mobile play in the story?
So CEO Mike Sievert, I think, put it perfectly. He said, there's a certain degree of, I forget the word he used, but he alluded to allure and having connectivity everywhere. And I think all the carriers are looking at satellite as a potential add-on service and a great excuse to raise prices. While at the same time, for consumers, it really does give you connectivity in areas where you just otherwise wouldn't get bars. I think the rollout for T-Mobile and others is going to be what I'll call a staged rollout, where initially you'll have the ability to text and maybe make 911 calls, but ultimately I see satellite being able to provide voice and probably low-speed broadband services, again, in areas where you otherwise wouldn't get coverage.
All right, John, really appreciate your perspective here. That is John Butler of Bloomberg Intelligence. T-Mobile shares up nearly 8% pre-market, and this is one of the outperformers. Shares up about 37% over the past year or so. And later today, the CEO of T-Mobile will join Bloomberg Technology at 11 a.m. Eastern. But coming up on this show, more on earnings with NASDAQ Chair and CEO Adena Friedman. She joins us next hour. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Welcome back to Open Interest. A quick check on futures as we count down to that opening bell. You can see still nursing losses on the S&P 500, currently lower by about 0.1%. We went a long way towards reversing some of the losses we saw on Monday in the aftermath of that DeepSeek news, but still the S&P 500 lower by about 0.5% to 0.6% on the week. The NASDAQ 100, much deeper hole there for the big tech index, trying to work its way out of that right now, currently higher by about 0.2%. We have a lot of catalysts in the form of earnings coming up after the bell for big tech, so keep an eye on that one. And the small caps currently lower by about 0.1% on the Russell 2000. I do want to bring you some headlines that we're getting from Mexico's Claudia Sheinbaum. She's saying that if U.S. tariffs are added, we have a plan, but also saying that we don't believe the U.S. will add tariffs on February 1st. And February 1st is on Saturday, Shanali, so we are getting closer and closer here.
Close to the line. In addition to Mexico, we're watching Canada closely as well because, of course, they have a press conference for the central bank around 10:30. A lot of people will be keeping an eye on for any tariff conversation that might happen and how the country might respond, of course, to what that might look like to them.
Yeah, a lot of international news to keep an eye on here, but we'll stick in the U.S. next because we are less than 4 minutes until the opening bell. Nancy Tengler joins us. This is Bloomberg.
increase down to the 18 to 35-year-old market. How do we bring these kids, these influencers, this new generation of people interested in the game of golf? There's 738 million people in the world who are interested in the game of golf. Don't play the game of golf, but interested. There's about 60 million golfers. So we have another 670-odd million people we can go figure out how to get them interested, not just in live, but in the game of golf. And so we sit down and you talk about this internally with your production team, you talk about with your marketing people. When you look at our audience base today, that we have like about just around 50% of our ticket sales are 45 years and old and younger. Following the PGA Tour, it's the oldest aging demographic in sport. It's 67 and a half. So in a matter of a year and a half, basically, we've pulled that 67 and a half down to 45 because of our product, because of the entertainment side. There are places around the world where 32% of our ticket sales are women. So they're coming to an event that they feel inclusive with. Right? So all of a sudden, we're seeing these data points coming out going, my gosh, why haven't, we're owning this space.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
All right, we are moments away from the start of trading on this Fed day, on this earnings day, on this hump day. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. As I said a couple minutes ago, really in wait-and-see mode right now. Of course, we get the decision from the Fed at 2 p.m. Then the trade reverses when we hear from Chairman Jerome Powell at 2:30 p.m. And then everything changes again when we hear from the likes of Meta and Microsoft and Tesla after the bell today. But you take a look at where we are right now at 9:30. We have the bells ringing. People are clapping at the exchanges, and we are waiting for trading to really kick off here. We had a big rebound yesterday. Now the question is, can we sustain that momentum heading into the catalyst that we'll see this afternoon? Taking a look at where we stand about 20 seconds into the session, looks like the answer is no. If you take a look at the S&P 500, currently lower by about 0.1%. You take a look at the NASDAQ 100. An optimist would say we're a little bit higher. Someone maybe a little bit more clear-eyed would say that's pretty much unchanged. And it's a similar story if you take a look at the small caps, the Russell 2000. Small moves overall as we sort of recover from what we've already gotten in the first 2 to 3 days of this week. But let's take a look under the hood now, because we have some stocks to keep an eye on. And one of them is T-Mobile. Reported earnings this morning and said that it added more customers in the fourth quarter than expected, and that its forecast for net customers also beat the average analyst estimate. CEO Mike Sievert joins Bloomberg Technology today at 11 a.m. He's probably having a great day because his stock is currently up about 7.5%, Shanali.
You know, the life of a TMT banker these days. It looks pretty good over there. Anyways, also in the world of technology, ASML up about 5%, rising the most in 5 years. The AI boom is fueling demand for its chip-making machines. We're thinking a lot about chips this week. We're going to expect to hear more about CapEx from the big AI names tonight, and those names include Meta, Microsoft, and Tesla. And the focus, of course, is on that CapEx spending. After Chinese competitors in the AI space suggest not as much money is needed to create the top-of-the-line AI models, you see a wait-and-see trade in Meta, roughly 0.2% lower. Microsoft down 0.6%, as it looks into what happened with DeepSeek, of course. Tesla down almost 1%, fluctuating 0.6% now. Interesting to see a little bit of negative attitudes before these report, Katie.
Yeah, everyone a little bit nervous, of course, as we try to understand what DeepSeek represents, not just, of course, their specific AI models, but what's to come when it comes to the AI build-out and all of those spending plans. Let's discuss earnings and everything else with Lafferty Tengler CEO and CIO Nancy Tengler, and I am delighted that you're joining us at the desk today.
It's so much fun to be with you both. I feel like we coordinated.
Absolutely. In the group chat there. I want to talk, of course, what we learned at the beginning of the week with DeepSeek, because you take a look at the weekly charts, absolutely leaving a dent right now. NVIDIA shares still down almost 12% for the week. That's one of the names that I know that you've been excited about over the past several years. Is this a dip worth buying?
Yeah, we did. I think yes, but you have to be disciplined and you have to be deliberate. I think, Katie, that's really the key point. And it also, I imagine, depends on when you got in.
Yeah.
So that's important as well. But we're long-term investors, and if you looked at the trading action, that was all the algos. Then the hedge funds join in. That's traders. It's not investors. And so for those of us who are investing for the next 3 to 5 years, we use volatility as our friend. And as long as the fundamental, nobody was talking about the underlying fundamentals. They were just talking about DeepSeek and the $5.6 million alleged investment that they made in order to develop their model. So I think you have to have common sense and you have to have the ability to dig into the numbers. And that's what we do. We have analysts that do that.
I want to go back to last week, which feels like a year or two ago now, because Facebook, Meta, had said that they would be spending a lot more than what was expected in CapEx.
Up to $65 billion.
Totally. And if you think about that, do you think that the others will still follow, or do you think that the DeepSeek noise right now is going to really overshadow some of those projections?
I don't think so, Shonali. I mean, we also had Project Stargate announced, and so that was one of the things that made me think this announcement was somewhat suspect, the timing of it, if you will, because Silicon Valley's known about DeepSeek for months and had war rooms set up, and we're already analyzing the model. So this was, I think, meant to be a shot across the bow that said, hey, we're competitors in this space. Don't underestimate us. And that's and a little bit of fabrication or hyperbole, potentially, as I would have said to my kids.
Yeah, there's plenty of skepticism around some of those numbers that's percolating its way across Wall Street right now. I am curious, though, about the rest of the AI supply chain, because it's not just necessarily in the big tech giants that you've seen this drawdown. It's also in utilities, in energy stocks that had been real beneficiaries of this boom and all the power demand that was going to and is expected to come from AI demand. Do you think that that's still an investable narrative, or did that get a little bit over its skis?
Well, I think some of those stocks ran way too fast on just a hope and a dream. But there are places where we'll be adding, or we have already added. I would also point out that the software names where we were shifting to in the last 6 months did really well on Monday. Was that just Monday? They did really well and are holding up well. Many of them are going to report today. ServiceNow, which is one of our 12 best ideas. Microsoft, another 12 best idea. So I think that's one aspect of the trade that you can still, with confidence, invest in, because the application side. And then in terms of the utilities and the need for power, our power grid's old, and we are onshoring. That is an objective of this administration, to onshore manufacturing. So I think demand is going to continue to rise for a name like Quanta Services, and that's one of the ones that we own and will continue to add.
So another name that is in the Mag 7, but a little different flavor here. You're looking at Tesla. When we talked to you after the election, after that big run-up, you said you were taking some chips off the table there. Yeah. Wondering how you feel about it now, because in the Elon Musk universe, yes, this has been a stock that's been bid up, but he's got a lot of other things going on with Starlink. He's selling X debt now, of course, via Morgan Stanley. He's looking at a new apartment in West Palm Beach. I mean, how much love do you have for Tesla to begin this year?
We still like it, and on weakness, historically, that's what we've done. We've added on we've kept a core position, we've added on weakness, and then we've trimmed on strength. But the Model Y announcement in China was pretty compelling in terms of units sold. The FSD progress, Elon tweeted, it's my favorite entertainment when I get up first thing in the morning to look at his tweets. But he tweeted that they were, FSD was taking the cars to the dock, so you saw this slow, transport or slow parade of the cars driving themselves to the docks. So I think that will fast track. We've always been big fans of the Megapack business, which is high grade electric utility storage. So I think that will continue to grow. It grew 52% last quarter. We expect to see a good number. It's tomorrow, today?
No,
Tesla?
today.
Tesla's today, yeah.
Today's after market.
'Cause it's Wednesday.
Right? What day is it? Nobody knows anymore.
Reportedly, it's Wednesday.
2 days into DeepSeek.
You call it excitement. I call it anxiety. I do have alerts for his tweets, and you never know where it's going to going, right?
He tweets with such frequency, it's really hard to keep up with. And it's not just the actual tweets, it's the replies to other people's tweets as well. But I mean, we could spend another hour on Elon Musk. But I do want to talk about the Fed. It seems like everyone is eager to forget that we have a Fed meeting this afternoon. And to be fair, it's expected to be pretty boring. But I'm wondering how an investor such as yourself views the Fed and the impact of monetary policy, because you run pretty concentrated portfolios. Your high conviction ideas really span industries here. How do you layer on monetary policy influence on top of that?
So we've been, as you know, super critical of the Fed. I think they've made mistake upon mistake, and the 100 basis points cuts that we saw by the end of last year just resulted in a 100 basis point rise in the 10-year. So our head of fixed income is quite concerned that the Fed is going to make a mistake and be unconstructive for the bond market. So they, I think Chairman Powell emphasized tariffs, and so far we haven't, and that was influencing policy. And so far we haven't seen that. So I think we're going to be listening for what he says about monetary policy. I'm sorry, fiscal policy, what he says about the environment. And but in fact, what the Fed should be doing is really looking forward and trying to estimate how fast this economy is going to grow. And we think that the neutral rate can be much higher because of productivity enhancements coming from generative AI, among other things. So I've kind of stopped listening. I'm sorry to say. He will impact the market in one way or another, but I don't think it'll be sustainable.
Nancy, we have to leave it there. Thank you so much for joining us on set today. That is Nancy Tengler, of course, of Lafford Tengler, in the middle of a very big earnings moment for the market. Now, coming up, it's a big day, as we've been talking about, for tech. Microsoft Meta earnings on deck. We're going to discuss the details with Brent Thill of Jefferies. Stick with us. This is Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together. And that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
You're spoken, sorry.
My voice and my conversation, my poetry, you know.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, UBS raising its price target on Starbucks after the company posted better than expected first quarter results. The analyst maintaining a neutral rating, however, saying that the coffee chain faces considerable pressure in 2Q from restructuring changes, but a lot of enthusiasm in the stock right now, currently higher by about 5%. Next up, Datadog cut to a hold over at Stifel. The analyst is anticipating revenue growth and margin headwinds over the course of the year. And finally, we have Piper Sandler noting a new Reddit feature that allows marketers to import an ad campaign over from Meta. The analyst writing that it could help bring more advertisers to the platform, and he has an overweight rating on the stock with an $197 price target, Shanali.
And Microsoft, Meta, and Tesla, worth a combined $7 trillion, are reporting after the bell. Capital spending for their AI efforts are in focus as Chinese competitors throw a wrench in the amount of money and energy needed to power the revolutionary technology. We're going to discuss this with Jefferies analyst Brent Thill. He has a buy rating on Microsoft and Meta. And Brent, one thing we've been discussing, of course, is if we did not have that DeepSeek scare in the CapEx world on Monday, the story would have been different. How much noise will there be as these companies look to start answering that CapEx story, justifying really the spend they're making?
Yeah, there's a lot of noise right now in terms of what is real or not. And I think ultimately, no one is questioning the DeepSeek technology. What everyone is questioning is the cost to effectively achieve their goal. And most have said that this is not true. This couldn't be true. You can't do this with $5 million. You look at the incremental CapEx raise just on Friday that Meta put out, now spending, and CapEx will be up 60%. Microsoft's CapEx will be north of $80 billion this year. You look at the rest of the industry. If all these U.S. tech companies were that efficient, shouldn't CapEx start to slow? And everyone's ramping CapEx still. So I think again, there's a lot of questions. Probably the most important question right now is AI seeing a moment of inflection in terms of training costs, and what does that mean for the industry? We don't believe, again, we're too early in this journey. In our belief, to see the magnitude of changes that DeepSeek is claiming. And so we don't believe that the rest of tech is going to suddenly say, hey, AI costs are falling out of the sky. We don't think we're going to see that. I think it's going to become more efficient. I think the bigger question is on AI adoption overall. Many enterprises are really slow in adoption, and that's going to be the bigger hurdle, not necessarily some of the costs at this point. So we don't believe that some of the claims are true. We certainly believe the technology is viable. And we expect both Microsoft CEO and Meta CEO tonight to address this. It's probably the number one question. It's probably even ahead of most questions about the financials, because it's having such a big turbulence in the rest of the market. And so our belief again is that it's probably not as there's a bigger bite than bark right now from what DeepSeek is saying.
Well, Brent, I mean, you've addressed some of this, but I am curious whether we risk a sort of head in the sand moment here, because, okay, maybe it wasn't $6 million, as low as $6 million, but consensus seems to be that this was developed much more cheaply than what we're seeing by American firms. And I hear what you're saying, that you don't expect AI costs to fall out of the sky here, but I mean, when it comes to the likes of Meta and Microsoft and how they're spending that money, I know you have a buy rating, but do you think that we should be rethinking some of these priorities here?
I don't, because we're at the beginning of this tectonic shift. And again, Microsoft has said this so many times to this question. Do you want us to get 5% market share or 50? You choose. As an investor, I want 50. I don't want 5. And we're at the beginning of the shift. So again, I think what you're dealing with are very responsible companies that have shown ROIs. If you look at Microsoft's backlog relative to their CapEx growth, they're seeing great incremental backlog growth, and they're showing a reacceleration in their Azure business. They're showing this value where you're starting to see CIO surveys where CIOs are like, I've deployed these co-pilots to 5-10% of the workforce, but I'm going to 90% in the next 3 years because I want to make them more efficient. So I just don't think that this is the right time to pull back the throttle when you're in takeoff. I mean, no pilot would ever do that.
Well,
this just doesn't make sense. Right. So I don't think that we're overspending right now. We have to. The bigger question really is, are these technologies going to prove out to the magnitude of what the hype is? Right. And I think that's the bigger risk.
Brent, speaking of hype, right? I mean, these are still companies that make up so much of the S&P 500 market cap. You're having a lot of investors here worried about concentration risk and valuation too. So in your coverage universe, what actually still has the most room for upside?
Well, software in general will benefit from this trend if we become more efficient. We've said this. The software industry has underperformed massively relative to AI infrastructure. So if you look at NVIDIA, VST, VRT, all the AI infrastructure names, we've said this repeatedly. There's going to be a shift, and we're seeing that in the last 2 days where money's flowing out of the AI infrastructure and into the software layer. CEOs like Mark Benioff at Salesforce, all the way through all the execs that we know are saying, look, this is great. It democratizes AI, it'll make it more efficient. This is if this is true, this is a very good trend for the software industry. So we like Microsoft, Salesforce, Snowflake, and again, for enterprise AI, both Microsoft and Amazon. For consumer AI, Google and Meta. These companies are in really good spots because they're going to be able to effectively monetize AI at a much higher rate if this is true.
Right.
Again, I do not believe it's true.
All right, Brent, we got to leave it there. Great to get some time with you ahead of a big earnings day. That is Jefferies analyst Brent Thill. Now, we do want to talk about some breaking news coming out of Canada, specifically the Bank of Canada, cutting its policy rate by 25 basis points to 3%. That had been the estimate here. This bank has eased about 200 basis points since June. The press conference comes at 10:30 a.m. That's where it could get interesting, of course. A lot of focus on tariffs with that levy expected to come into place on Saturday as it stands right now. Now, coming up, Howard Lutnick, he is President Trump's nominee for Commerce Secretary, set to testify at his confirmation hearing. We'll take a look at his priorities in our Wall Street beat coming up next. This is Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
President Trump making sweeping changes to the U.S. government at a pace that is causing confusion among agencies and organizations nationwide. Trump signed an executive order for organizations nationwide. Trump signed an executive order freezing trillions of dollars in federal grants and loans, later saying it does not apply to individuals who get government assistance. A federal judge temporarily blocked the order last night. And separately, the White House offered roughly 2 million federal workers the option to resign, but to be paid through the end of September. That brings us to the Wall Street beat, because also happening at the top of the next hour, we're going to be monitoring the confirmation hearing of Howard Lutnick for Commerce Secretary, Bloomberg's chief Wall Street correspondent, although that's kind of the same right now.
Another promotion.
Right. Sridhar Natarajan joins us now to discuss the priorities if confirmed. Gina Raimondo took the Commerce Post and made it much bigger under the Biden administration. Howard Lutnick, of course, was very close to the president during the campaign. What are you expecting in terms of the hearing itself? We already know a few things, like the 800 entities he's associated with in the ethics filings that he needs to separate from. But what are his plans?
Look, yes, you're right. Under Gina Raimondo, the Commerce Department did become a very important function inside the Biden administration. But you can be guaranteed that in the Trump administration, a trade and tariffs-focused administration, the role held by the Commerce Secretary, and therefore the role that's likely going to be held by Howard Lutnick, will be extremely important. Trump has already tasked the Treasury, Commerce, the USTR to work together to study the various trade policies that the U.S. government has with various blocs of nations across the world, because this is one area where you will continuously see a flow of news over the next several months and possibly through the course of this administration. So Howard Lutnick's role there will be extremely important. To me, what will be interesting is Commerce and Treasury will have to work in close concert with each other. And we know that post-election, there was so much reporting about the friction between Scott Bessent, the Treasury nominee now confirmed to be Treasury Secretary, and Howard Lutnick. So can the two of them set aside their differences and work together? Or will we see some jolts and turbulence and obstacles down the road, which might lead to some personnel changes, which is not something you can rule out in a Trump administration.
Yeah.
But for now, Lutnick's making all the noises that the business community will like.
Yeah, of course, they were jockeying for the same job, so maybe that got a little bit awkward there. Let's talk about some potential issues here. I mean, as relative to the rest of the Trump nominees, Lutnick is expected to have a pretty easy confirmation, but you take a look at some potential conflicts. We know that Elizabeth Warren has been pressing him on his relationship to Tether, for example. What are we expecting there?
Look, there's no doubt that when you look at the Democrats, their rallying cry is going to be that this is a government by the rich, of the rich, for the rich. Trump has obviously surrounded himself with ultra-wealthy financiers, but at the same time, the Republicans will say these are people who've had success in the business world, and therefore they can be trusted with these roles to drive forward a very growth-focused agenda.
Well, speaking of, and we have less than a minute here too, you reported yesterday that Stephen Feinberg of Cerberus is looking to Goldman Sachs to potentially offload his stake in the company. You have John Phelan of MSD, formerly of MSD, joining as Secretary of the Navy. What does it mean for Wall Street to have so many of their closest contacts in offices?
At the very least, they can take comfort that unlike the Biden administration, this is not going to be a government that will bring out the pitchforks against Wall Street.
All right, Sridhar, always great to see you. That is Bloomberg's Sridhar Natarajan. And coming up in the next hour, we have plenty of CEOs to speak to. NASDAQ CEO Adina Friedman joins us, followed by Otis CEO Judy Marks, both reporting earnings. Looking forward to those conversations. This is Bloomberg.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Confirmation hearings begin this hour for President Trump's choice to head the Department of Health and Human Services. A famous relative is recommending lawmakers vote no.
Robert F. Kennedy Jr.'s cousin, Caroline Kennedy, is urging senators not to confirm his bid to become President Trump's health secretary, saying the job
is an enormous responsibility and one that Bobby is unqualified to fill.
But Senate Majority Leader John Thune says his party will work to confirm all of Trump's nominees.
We're going to continue to grind and grind and grind, and we'll do that through the weekend if necessary.
Allison Keyes, CBS News, Washington.
The Senate Judiciary Committee has just voted to confirm Pam Bondi to be the nation's next Attorney General. That vote, 12-10, along party lines. The president is making federal employees an offer he hopes they won't refuse: buyouts. Correspondent Ed O'Keefe.
If you resign, the email says, employees retain all pay and benefits regardless of your daily workload until September 30th, the end of the fiscal year. Many of the changes in the federal workforce are being driven by billionaire Elon Musk and his Department of Government Efficiency.
Mr. Trump has pulled government security for his former Joint Chiefs chair. Here's CBS's Cammie McCormick.
The Pentagon has confirmed General Mark Milley has had his security clearance revoked and his security detail removed. The Defense Department's Inspector General has also been directed to look into Milley's conduct to determine whether he should be stripped of a star.
Officials in northern India say at least 30 people have been killed in a stampede at a religious festival. Tens of thousands of Hindus had rushed to bathe in a sacred river. The event is held once every 12 years. Federal Reserve members are set to hit the pause button on interest rate cuts today when they meet for the first time since President Trump returned to the White House. CBS News business analyst Jill Schlesinger.
What I think the Fed is really telling us is they are still a ways away from reaching that target of 2% inflation, and the economy is doing just fine right now with these higher interest rates.
Reports say Fox has sold out of ads for the Super Bowl, with more than 10 commercials going for a record $8 million a pop. No word on how much this one cost.
I can't believe they let us back in this place.
Meg Ryan and Billy Crystal returned to Katz's Deli in New York City for a new Hellman's Mayo ad.
Oh my gosh.
Oh boy.
So good.
A la 1989's When Harry Met Sally, actress Sydney Sweeney's the customer this time who instructs the server.
I'll have what she's having.
NASDAQ is down 112. This is CBS News.
TaxRelief.com.
The nation's largest indigenous tribe says members are being unfairly targeted in the new crackdown on undocumented immigrants.
There are complaints from the Navajo Nation about tribal members being racially profiled by federal agents and in some cases swept up in recent raids targeting undocumented immigrants in the Southwest. Crystalline Curley is Speaker of the Navajo Nation Council.
We've been getting reports that many of them have been visited at their place of residence or their workplaces, being asked for identification.
She says they're being stereotyped and targeted because of their skin color. Steve Kathan, CBS News.
If at first you don't succeed, the budget airline business will try again. Frontier going for its second attempt at a merger with bankrupt Spirit. Frontier was blocked the first time around when JetBlue put in a higher bid. The Justice Department blocked that, saying it would drive up ticket prices. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fats?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live as well on YouTube, so head over to youtube.com, search Bloomberg Podcast Live, and that's the best way to find us. Alex Steele, she is on assignment today. Sitting in for Alex is the John Tucker. John, it is Fed Day, in case you weren't aware.
I'm so excited.
Yes, there
and
we
nothing
go.
will happen.
Nothing will happen. That's exactly
well,
right. But
no, I shouldn't say that. We're going to wait till what Jay Powell sort of divined what he has to say, and maybe we can figure it out.
All right, come up in the next 2 hours. We got a couple little audibles here. We're going to have Danielle DiMartino Booth in studio. She's at QI Research, really one of our go-to voices on the Fed, so she'll be in there. Then we're going to go down to Washington, D.C., and we're going to listen into the hearing for R.F. Kennedy Jr. He is nominated to be Secretary of Health and Human Services. So we will go down to D.C. for the Q&A session there. That could be quite interesting. 11:15 p.m. We're going to come out of that, and we're going to have the T-Mobile CEO, Mike Sievert. He's going to be in studio. The company just reported some good earnings, stock trading higher, so we'll get a sense of what's happening in the world of wireless there. They have an announcement with Apple and Starlink as well, so they got a lot of stuff going over at T-Mobile. The CEO will be in studio, and we'll do that. So a lot coming up in the next couple hours, and we're going to start off with the Charlie Pellet.
Thank you very much, Paul Sweeney. You mentioned T-Mobile. T-Mobile stock is absolutely surging right now, up by just about 8.5%. We'll have a whole lot more on on T-Mobile coming up right here on Bloomberg. The headline off the Bloomberg says it all. Stocks fall on Fed Day with all eyes and ears on tech earnings. Right now we've got Dow Industrials up 78, up 0.2%. Lots going on, by the way. We got you covered on Bloomberg Radio and Television. S&P down 6 now, down 0.1%. NASDAQ lower by 81, decline there of 0.4%. 10-year 4.52% with a 2-year that's currently yielding 4.19%. Spot gold down $6 the ounce, down 0.2%. And West Texas Intermediate crude oil down 0.2%, 73.60 a barrel on WTI. Bitcoin up 2% right now, 102,290 on Bitcoin. So what about the overall market backdrop? Cameron Dawson is Chief Investment Officer at New Edge Wealth, and she was a guest this morning on Surveillance.
Some of the momentum in the market has slowed. Is that a death knell for the rally? Absolutely not. But our base case for 25 is that the market does flatten out. We get this wider, choppy range as we move through the year.
And you can hear more of the conversation with Cam Dawson on the Surveillance podcast. You can download it wherever you get your podcasts. Earnings, big tech earnings, front and center. And yes, we got it covered after the bell today. Microsoft down 1.2%. Tesla down 1.1%. Meta Platforms down by 0.6%. Recapping, S&P down 0.1%. Your 10-year 4.52%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pello, thank you so much. We appreciate that. John Tucker sitting in for Alex Steele today. I'm Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio in New York City. We're also streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. So, John, kind of a mixed day today here, ahead of the Fed here. It doesn't seem like anybody wants to kind of go out on a limb here, just looking at the markets.
Has the deep seek effect sort of worn off?
I think people maybe have kind of gotten a little more context around it here, and a lot of the companies, it seems like, are saying the chip companies, the market's big enough for all of us, you know, the NVIDIAs of the world, and then the people that actually use AI, like if you're a software company like Microsoft, they're like, hey, lower cost is good. So
competition is good in the end.
Competition is good, and that is certainly, presumably, if the costs come down, will drive usage and use cases, and that could be good for the whole ecosystem.
But none of this is going to show up in the earnings that we get. I mean, right.
Exactly. So we'll hear from the big tech companies after the close. Bailey Lipschultz, he joins us here to tell us what's happening in the market. Bailey covers the equity markets for Bloomberg News. Bailey, what are you looking at?
Yeah, you guys mentioned it. Charlie mentioned it. Best performer in the S&P 500 this morning is T-Mobile. I know you guys are talking to the CEO later today. Crushing earnings, though, beating really on every metric. This is a company that in the quarter added 903,000 subscribers for their postpaid phone. Expectations were for about 858,000, and they also outpaced Verizon and AT&T in connections for the last 3 months of the year. Record number of customers signed up in 2024.
What's the secret sauce? I mean, they're giving stuff away?
It's all centered around the iPhone. The iPhone, I don't know if you watch TV, but the ads that T-Mobile is pushing out.
Yes, Bailey, I watch TV.
Well, some people stream, you know, some people are more Netflix, but when I really only watch live sports. But it is really just kind of the partnership with the new iPhone, expectations around Apple Intelligence. I know when you look at Apple in particular, it does seem like there's slowing growth, especially in region markets like China, but it is really a big driver for T-Mobile just because you're trying to penetrate a different consumer, trying to get people to pivot away from AT&T or Verizon. And also, Paul, as you mentioned, the kicker on that is that Starlink, SpaceX, Apple partnership.
And we'll talk to the CEO at 11:15 on that.
Yeah.
What else you got for us?
Looking at an outperformer this morning also is Starbucks, ticker SBUX, up right now a little over 4.5%. This coming as their turnaround bid, new CEO from Chipotle, showing progress. It's always interesting to me when we talk about better than feared comp sales, down 4%, had been down 7% in the prior quarter, trying to bring Starbucks back in kind of a refocused menu, focusing on speed, focusing on kind of getting people in.
Can I go in and just sit there and use their bathroom
trying
without
to get
buying
rid
anything?
of that. They're trying to.
They're also trying to bring people back into the store to get that old feel where you'd come and hang.
Yeah.
Hopefully buy something, because now the line for the drive-thru is around the block, and you go into the store and there's nobody there. I get my drink in 2 seconds.
I will always laugh though when I travel for work and it's like the Starbucks at the terminal is always 85 people in suits, like more than happy to wait an hour and a half when Dunkin's right next to it. And there's no line, but I digress.
All right, one more.
Underperformer, one of the worst performers in the S&P 500 is Danaher, ticker DHR, down almost 8%, biggest drop since April 2023. This is a healthcare tools company, so they make things like microscopes, cell processors, really bad earnings, but also a poor outlook for what they expect in 1Q, as well as the remainder of 2025. This has been a life sciences and diagnostic space that has been really brutal.
They used to make Craftsman tools, or do they still? Right? It was Danaher.
Danaher has spun out a lot.
Yeah. Oh, yeah. That's right. All those companies like Danaher, they've spun off.
Right.
Investment bankers dream, those conglomerates. I get paid whether I sell it to you or buy it from you. It doesn't matter.
And again, though, this is a company that I think you would think most investors know, but it's $165 billion. This isn't a small kind of shop, and it has spun out a number of big names.
And GE Aerospace picked up their old CEO, right?
Yeah.
And we know how they're doing.
And very well. Very well. So good stuff. All right, Bailey, thank you so much. Bailey Lipschutz, who covers the equity markets for Bloomberg News. It is Fed Day. Again, 2 p.m. we'll get the statement, 2:30 the conference, and 1:30 Bloomberg surveillance starts coverage.
Tom Keen's coming
Lisa,
back.
John Farrow, so that'll be
All-star
good as
cast.
they do it. Danielle DiMartino Booth joins us here in our studio. She is our go-to voice for the Fed and what it all means here. She's the CEO and Chief Strategist for QI Research. Danielle, thank you so much for joining us yet again. I guess the consensus, John and I were just talking about it, like it's going to be who cares this time? Like there's not going to be any real news coming out of it. They're not going to do anything. That always feels like, uh-oh, be careful what you wish for here.
Yeah, because you never know whether you're going to get scripted Powell and he's got every single potential question written out his answer, or you're going to get Powell who just goes right off the reservation. So it is always kind of a crapshoot, if you will. I do think that the market is curious about March. And now that we've seen the Bank of Canada
That's right, the Bank of Canada
announced that it's going to stop quantitative tightening, start asset purchases back up in March. There was a good story out on the terminal a few days ago about banks' focus on whether or not quantitative tightening on the Treasury side is going to end in May, or whether a few of the biggest names push it out to September. So I think that he will get questions today on how data dependent he is in terms of pushing that March 33% probability of that first rate cut up past the 50% mark, and what he's going to do with the balance sheet.
Are we on the right path with inflation right now? The right trajectory?
We really are. And in fact, I think that what was missed at the last FOMC press conference, which was reiterated by Christopher Waller, Governor Waller, is that the Fed is focused now on what's called market-based core PCE. And it sounds complicated, but it's not like supercore. It's not like they invented it out of thin air. It's been reported for years and years, and it really is just trying to get a truer real-time read on inflation. And then they both went on to talk about how it was incorrect to use imputed shelter, owner's equivalent rent, OER, in that market-based PCE, core PCE, and they both talked about substituting in real rents and actual new rents. And then we had the bomb dropped a few days ago because the Cleveland Fed new tenant rent index went from positive 1.6% year over year in the third quarter to negative 2.6%.
Really?
That delta was very big. If you plug that in for OER instead, if you plug that in for owner's equivalent rent instead, market-based core PCE is at 0.98% year over year. The Fed is below its inflation target.
Okay, below.
And again, Christopher Waller reiterated all of this arcane stuff.
But we're not going to hear that from Fed Chairman Powell today, are we?
But Powell, when you go back and read the transcripts from December the 18th, he specifically lays out why he's using new rents instead of imputed shelter, and why he's shifted his focus to market-based. There was so much else that happened at that press conference that people missed this introduction of a whole new inflation metric that Waller then had to come out a few weeks later and reiterate. And we've seen the bond market act very well since those Waller comments.
Yep.
All right, tariffs, immigration, fiscal, and toss whatever else in there. What kind of a witch's brew is that for the Federal Reserve?
Well, I think the Federal Reserve Board of Governors Public Affairs Office wants us to know exactly what kind of a witch's brew it is. I don't believe in coincidence. And the 2019 FOMC transcripts were just released a few hours ago. And they walked through all of the Fed discussions for the year of 2019. Transcripts were released with a 5-year lag. But they walked through the Fed's reaction function to the trade war as it played out, to tariffs, to this idea that we had negative world trade for the full year of 2019. Fed officials were preparing for recession. We've never not gone into recession in the United States when world trade has been negative for the full year, which it was in 2019 as a lagged result of those tariffs being rolled out in 18 and 19.
All right, the warp function, love it or hate it, it's got 2 rate cuts priced in for this year. I don't know, I kind of hear almost as much jawboning now about rate increases possible in the back half of the year. How do you think about that?
I think that when jobs hard to get is as high as it is, and when you run a very simple one-factor regression and find out, it's had a jobs hard to get conference board, which we saw yesterday.
Jobs hard to get.
Jobs hard to get.
Okay.
That is the
so
most.
people aren't losing their jobs, but it's hard to get a job.
Right.
Gotcha.
And when you cross this kind of Rubicon that we've crossed, and you run that against the unemployment rate going all the way back through the history, U.S. households think the unemployment rate is closer to 4.6%, just based on their perceptions of how difficult it is to get a job. Jobs hard to get. That's why the conference board caught so many investors' attention. We saw 75% retracement in tech stocks on turnaround Tuesday, and yet the bond market really was well behaved. I think that's because the conference board was as weak as it was on the labor front.
Well, the conference board, the outlook for inflation, is that sort of a self-fulfilling prophecy, the reason we pay so much attention to those outlooks?
We pay more attention to inflation expectations, A, because the Fed tells us to, but B, because households are skittish. And so they're concerned that prices are going to go up. This is, for them, for households, this is tariffs 2.0. And so they've seen this once before. I think what households are missing, though, is we're not going to be sending out 3 stimulus checks in cash and handing households trillions and trillions of dollars in cash, which turbocharged the inflation impulse as we got into pandemic spending.
You mentioned the Bank of Canada. Where's the Fed? Where's their balance sheet?
It's still gigantic. I mean, they've really only rolled off about $2 trillion or so. But Powell's been reticent to talk about it. He's basically said it's going. It's going to continue going.
So what's the curveball that could come out today? I mean, I know John and Lisa and Tom will be covering it wall to wall, but what's the curveball for you?
I'll be listening to whether or not, because back in September, he started mentioning Indeed.com. He mentioned the conference board. At the subsequent meeting, he said that he knew that payrolls were inflated because of revisions. So I'm going to be listening for Powell citing kind of non-orthodox type of data that suggest he's a little bit more dovish.
You're like the queen of non-orthodox data. You come up with data points I never even hear of.
This is true, and you have to be in this environment because companies don't want to announce layoffs. They want to announce attrition, and they want to say that, like Kohl's Corporation did yesterday, we're just not going to fill the open positions. So companies are being very careful about the word layoff. And so you have to follow much more closely how. You got to follow the quarterly earnings reports, because then they're like, oh, we took a $2.9 billion severance charge at Verizon.
In any boxing match over independence, who are you betting on? Donald Trump or Jay Powell?
I am betting on Powell to remain independent. I think if Trump could have fired him in his first term, he would have. But the Supreme Court precedent on that particular issue is very explicit, that you cannot, unless it's for true cause, not because I want lower interest rates, quote unquote. You cannot, it's very difficult to get rid of the head of a federal agency and have that survive the Supreme Court.
Yep, very good. Danielle DiMartino Booth, CEO, Chief Strategist, QI Research, one of our go-to voices when it comes to the Federal Reserve. We appreciate getting a few minutes of our time in our studio. Let's go to Charlie Pellet right now. with our news in New York.
Thank you very much. Here's what's going on. We are on Fed Watch. We are on Earnings Watch. After the close of trading today, Microsoft, Tesla, and Meta, all three trading lower right now. We've got the S&P down 13, drop there of 0.2%. NASDAQ down 90, a decline of 0.5%. Dow Jones Industrial Average up 48, up by about 0.1%. 10-year 4.52%. The 2-year 4.19%. Gold down $6 the ounce, and West Texas Intermediate crude down 0.6%. Bankrupt Spirit Airlines has rejected a new acquisition offer from the parent of Frontier Airlines, but says it remains open to a long-discussed combination of the budget carriers. Frontier shares ULCC as an ultra-low-cost carrier. That stock trading higher by 4.9%. JetBlue, which tried to buy Spirit, down by 1.2%. So again, recapping, S&P lower by 12, down 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. It is John Tucker sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. We are waiting. We're going to go down to Washington, D.C., the Senate Finance Committee, the confirmation hearings for Robert Kennedy Jr. For HHS Secretary. We're going to go down there for the Q&A in just a moment. He's giving his opening statement right now. Let's check in with Dwayne Wright. He is over Senior Healthcare Policy Analyst at Bloomberg Intelligence. Hey, Dwayne, what are the key topics for Mr. Kennedy Jr. here as he navigates this hearing today?
It'll be an interesting hearing with just about everything on the table, from his views on abortion, the whole chronic disease, make America healthy again angle, prescription drug prices, and of course his views on vaccines. At the end of the day, from the Republican standpoint, I don't expect any hard questions going RFK's way. This is the president's nominee. Any hard questions have been asked behind the scenes. If there are concerns, they've been addressed behind the scenes. This will be an opportunity for Democrats to address a lot of those questions in front of the American public. So pretty much every healthcare topic that you can think of will be discussed today.
Is this so? It's not going to change anybody's minds, these hearings.
In terms of the steps, I think when we think about how RFK Jr. becomes the nominee to the actual secretary, the committee, the Finance Committee, has the first vote. There's 14 Republicans. By and large, probably all 14 of them will vote for him, so I don't see any minds changing there. I think the question will be, are there any Republican holdouts that could tank his nomination? Don't expect any Democrats to change their views, but can Republicans limit any kind of crossover votes and ensure that he can get the 50 that's necessary to get the 51 with Vice President Vance's vote to become the secretary?
Dwayne, in terms of healthcare policy, what are some of the more controversial stances do you think RFK Jr. will have to defend today?
Well, I think it's going to start with abortion and access, especially mifepristone, and his views there. Look at his views on vaccines and vaccine safety, and some of the information he has shared through his previous work on what these vaccines do or do not do. And then his overall view on healthcare in general in terms of access and affordability within the Medicaid program, Medicare program, and of course, Obamacare. So I think we'll see a lot of these key issues raised from the Democratic side.
Okay, very good. Dwayne Wright, we appreciate Dwayne Wright from Bloomberg Intelligence. Let's go down to Washington, D.C. for the hearings. RFK Jr., Senator Crapo questioning RFK Jr. Let's go to Washington, D.C.
Share your interest in the relationship between our diet and our well-being. And if confirmed, I look forward to partnering with you on those efforts. Would you share with the committee why you are passionate about the nutrition-oriented disease prevention and what you have learned?
Yes, Mr. Chairman. I had 11 brothers and sisters. I had dozens of first cousins. I was raised in a time where we did not have a chronic disease epidemic. When my uncle was president, 2% of American kids had chronic disease. Today, 66% have chronic disease. We spend zero on chronic disease during the Kennedy administration. Today, we spend $4.3 trillion a year. With 77% of our kids cannot qualify for military service. When I was a kid, the typical pediatrician would see one case of diabetes in his or her lifetime, 40 or 50-year career. Today, 1 out of every 3 kids who walks through his or her office door is diabetic or pre-diabetic. And the most recent data from NIH shows 38% of teens are diabetic or pre-diabetic. Autism rates have gone from 1 in 10,000 to 1 in 1,500, depending on what studies you look at. In my generation today, 70-year-old men, 1 in 34 in my kids' generation. We've seen this explosion of autoimmune disease, of allergic diseases. This is not just an economic issue. It's not just a national security issue. It is a spiritual issue, and it is a moral issue. We cannot live up to our role as an exemplary nation, as a moral authority around the world, and we're writing off an entire generation of kids.
Thank you very much. And if confirmed, how could we work together to integrate nutrition-based interventions into our healthcare programs like Medicaid and Medicare?
Well, there are many ways that we can do that. The federal funding of the SNAP program, for example, and of school lunch programs could be a driver for helping kids. We shouldn't be giving 60% of the kids in school processed food that is making them sick. We shouldn't be spending 10% of the SNAP program on sugar drinks. So we have a direct ability to change things there. We also, in Medicaid and Medicare, we need to focus more on outcome-based medicine, on putting people in charge of their own health care, of making them accountable for their own health care so they understand the relationship between eating and getting sick. Most importantly, we need to deploy NIH and FDA to doing the research to understand the relationship between these different food additives and chronic disease so that Americans understand it and make sure that Americans are aware of it. I don't want to take food away from anybody. If you like a cheeseburger, a McDonald's cheeseburger, or Diet Coke, which my boss loves, and you should be able to get them. If you want to eat Hostess Twinkies, you should be able to do that. But you should know what the impacts are on your family and on your health.
Thank you. Senator Wyden.
Thank you very much, Mr. Chairman. Before I begin
All
my
right,
questions, I'd like
Senator
to start
Ron
by entering
Wyden from the state of Oregon. We are listening to the RFK Jr. hearings in Washington, D.C.
Outlining what she believes is Mr. Kennedy's lack of personal fitness for the office.
Without objection.
Mr. Kennedy, you have spent years pushing conflicting stories about vaccines. You say one thing, and then you say another. In your testimony today under oath, you denied that you were anti-vaccine. But during a podcast interview in July of 2023, you said, quote, "No vaccine is safe and effective." In your testimony today, in order to prove you're not anti-vax, you note that all your kids are vaccinated. But in a podcast in 2020, you said, and I quote, "You would do anything, pay anything to go back in time and not vaccinate your kids." Mr. Kennedy, all of these things cannot be true. So, are you lying to Congress today when you say you are pro-vaccine? Or did you lie on all those podcasts? We have all of this on tape, by the way.
Yeah, Senator, as you know, because it's been repeatedly debunked, that statement that I made on the Lex Friedman podcast was a fragment of the statement. He asked me, and anybody who actually goes and looks at that podcast and will see this. He asked me, are there vaccines that are safe and effective? And I said to him, some of the live virus vaccines are. And I said, there are no vaccines that are safe and effective. And I was going to continue for every person. Every medicine has people who are sensitive to them, including vaccines.
Right. So
he interrupted me at that point. I've corrected it many times, including on national TV. You know about this, Senator Wyden, so bringing this up right now is dishonest.
Let's be clear about what you've actually done then, since you want to deny your statements. For example, you have a history of trying to take vaccines away from people. In May of 2021, you petitioned the Food and Drug Administration to not only block Americans from having access to the COVID vaccine, but to prevent any future access to the life-saving vaccine. Are you denying that? Your name is on the petition.
We brought that petition after CDC recommended the COVID vaccine without any scientific basis for 6-year-old children. Most experts agree today, even the people who did it back then, that COVID vaccines are inappropriate for 6-year-old children who basically have a zero risk from COVID. That's why I brought that lawsuit. I don't want to, I want to emphasize
Mr. Kennedy, the facts.
Now we got some protesters there in the Senate hearings for Robert Kennedy Jr., so they're trying to quell that. We'll see if we can get back to the Q&A. Well, they're still waiting. So we're waiting to hear from some further questionings from Ranking Member. Let's head back to these hearings.
And if there are any further disruptions, the committee will recess until the police can restore order. Please follow the rules of the committee. Mr. Kennedy, you may proceed.
I also want to point out that your recitation of what happened in Samoa is absolutely wrong, and you know it's wrong.
We'll get to that in a moment. Right now, we're talking about the petition that you filed to block Americans from having access to the vaccine and to prevent any future access to the vaccine. Those facts are on the record. My third question to you is, you made almost $5 million from book deals, mostly promoting junk science. In 2021, in a book called The Measles Book, you wrote that parents had been, quote, misled into believing that measles is a deadly disease and that measles vaccines are necessary, safe, and effective. The reality is measles are in fact deadly and highly contagious, something that you should have learned after your lies contributed to the deaths of 83 people, most of them children, in a measles outbreak in Samoa. So my question here is, Mr. Kennedy, is measles deadly, yes or no?
The death rate from measles historically in this country in 1963, the year before the introduction of the vaccine, was 1 in 10,000. Let me explain what happened in Samoa. In Samoa in 2017 or 2015, there were 2 kids who died following the MMR vaccine. And the vaccination rates in Samoa dropped precipitously from about 63% to the mid-30s, so they've never been very high. And in 2018, 2 more kids died following the MMR vaccine, and the government of Samoa banned the MMR vaccine. I arrived a year later when vaccination rates were already below any previous level. I went there, nothing to do with vaccines. I went there to introduce a medical informatics system that would digitalize records in Samoa and make health delivery much more efficient. I never gave any public statement about vaccines. You cannot find a single Samoan who will say, I didn't get a vaccine because of Bobby Kennedy. I went in June of 2019. The measles outbreak started in August. Oh, clearly I had nothing to do with the measles. Not only that,
Mr. Kennedy,
Senator, not only that, if you let me finish, Senator.
You have had some time,
If you let me finish, Senator, if you let me finish, there are 83 people died. When the tissue samples were sent to New Zealand, most of those people did not have measles. We don't know what was killing them. The same outbreak occurred in Tonga and Fiji, and no extra people died. There were 7 measles outbreaks in the 13 years prior to my arrival.
I just would like to get my time back. The nominee wrote a book saying that people had been misled into believing that measles is a deadly disease. He's trying now to play down his role in Samoa. That's not what the parents say. That's not what Governor Green says. It's time to make sure that we blow the whistle on actually what your views are. At least we're starting.
We need to move
Senator,
on.
I support the measles vaccine. I support the polio vaccine. I will do nothing as HHS secretary that makes it difficult or discourages people from taking either of those
Anybody
vaccines.
who believes that ought to look at the measles book you wrote saying parents have been misled into believing that measles is a deadly disease. That's not true.
We need to move on. Senator Grassley.
All right, Senator Chuck Grassley, a Republican from the state of Iowa, is now asking questions.
Like I did in my office, I'm just going to make some points to you. I got about 7 I want to quickly get done. And then at the end, I'm going to ask if you disagree with anything I say, and then address those things you disagree with. I'll make sure I save time for you to do that. A key responsibility of each member of Congress is oversight. Oversight allows us to hold bureaucrats accountable to the rule of law, and it helps keep faith with taxpayers. I expect HHS to provide timely and complete responses to congressional oversight. Number 2, PBMs, something you and I discussed in our office. I've been working to hold pharmacy benefit managers accountable in order to lower prescription drug prices. I expect you to work with us to hold PBMs accountable, and that may even ask in your support for legislation that's before the Congress. Drug pricing. Senator Durbin and I have, for a while, been trying to get a bill passed that requires price disclosures on TV ads for prescription drugs. Knowing what something costs before buying it is just common sense. President Trump tried to do this by regulation in his first term. Vice President Vance co-sponsored our bill last Congress. I ask you to support this bill, or if you can do it by regulation, to do it by regulation. On rural health care, the previous administration dragged its feet in opening up slots for rural community hospital demonstration programs. It also ignored concerns from rural pharmacies when implementing changes to Medicare Part D, and ignored rural needs when it comes to distributing physician residency slots. I expect you to prioritize rural Americans' health care needs. On agriculture, in our meeting earlier this month, we talked at length about agriculture. You prefaced the conversation by saying you will not have jurisdiction over these issues. I expect you to leave agricultural practice regulations to the proper agencies, and for the most part, that's USDA and EPA. On dietary guidelines, I've sent letters to the Secretaries of Agriculture at HHS requesting that they provide information regarding conflicts of interest on the Dietary Guideline Advisory Committee to increase transparency. I expect you to provide Congress with confidential financial disclosures from the Advisory Committee before finalizing dietary guidelines, so we know that nobody has a vested interest in it, is having undue influence. Lastly, HHS, Office of Refugee Resettlement Oversight. Last year, I expanded my investigation into HHS's Office of Refugee Resettlement. I wrote 24 contractors and grantees whose job it is to place unaccompanied children with sponsors. In many cases, children have been placed with improper vetted sponsors, placing them at risk of trafficking. The Biden administration's HHS directed these taxpayer-funded contractors and grantees to not respond to my inquiry. This is obstruction by the executive branch. I expect you to produce to me the records and data I've requested and instruct HHS contractors to fully cooperate with my investigation. I also expect HHS to not retaliate against any whistleblowers, including those who identify ORR's failures in vetting sponsors of unaccompanied. You got 45 seconds to respond if you want to.
I agree with all of those provisions, Senator. My approach to administration HHS will be radical transparency. If members of this committee or other members of Congress want information, the doors are open. I've spent many years litigating against NIH and its sub-agencies, HHS and its sub-agencies, NIH, CDC, FDA, on FOIA issues, trying to get information that we, the taxpayers, paid for, and oftentimes getting back redacted copies after a year or 2 years of litigation. That should not be the case. And if Congress asks me for information, you will get it immediately.
Thank you.
Thank you. Senator Cantwell is next, but until she returns, I will move on to down the list, and that would be Senator Cornyn.
Mr. Kennedy, welcome to you.
All right, right now we're going to hearing from Senator John Cornyn, Republican, Texas. We are at the RFK Jr. hearing to be HHS Secretary before the Senate Finance Committee.
In the auspices of Health and Human Services, I think this may surprise people, but that's actually the responsibility of HHS, the Office of Resettlement Relocation. Under the previous administration, as Senator Grassley alluded, there were roughly 500,000 children, unaccompanied minors, that were placed with sponsors in the interior of the United States. The previous administration took the position that it was not the federal government's responsibility once these children were placed with these sponsors. But the New York Times, in a series of investigative stories, pointed out that tens of thousands of these children, when they tried to follow up and find out how they were doing, whether they were going to school, whether they were being trafficked or abused, there was no answer, and they took the position it was not their responsibility. So I look forward to working with you to find those children and to make sure that they're not being abused. Millions of Americans are experiencing mild to moderate mental health and substance abuse issues, yet many struggle with timely and effective access. Primary care physicians are most likely to be seeing these individuals as opposed to a specialist, and it makes it important that these individuals, primary care physicians, be trained in patient-centered care, which would strengthen the integration of behavioral health care with primary care services. Is this something that you are concerned about, something you'd be willing to work with us on in order to implement?
Yes, Senator, and let me just reassure you that President Trump has personally spoken to me about locating those 300,000 children who disappeared over the last 4 years.
I don't think anybody has a fully accurate number, but it's hundreds of thousands, I agree.
And many of them we know have been sex trafficked and childhood slavery, and it is a blight on America's moral authority, and we need to find those kids. In terms of addiction services and substance abuse services, this is a priority for me. It was a priority for me when I was running for president during my campaign. I was a heroin addict for 14 years. I've been 42 years in recovery. I go to 12-step meetings every day, so I hear the stories every day. And I hear the many stories about denial of, or the barriers to access to care. And we need to improve that. And to answer specifically to your question, I think we can do that through GME, which is a program that is funded by HHS, that is the largest funder for medical school students. And that's one of the things for primary care physicians should understand addiction care. Addicts almost always go through a cycle where there is a moment where they hit periodic bottoms where they're ready to go into treatment. But it's fleeting and it's momentary. and we have that opportunity to save their lives. And then if we miss that little short window, they're off to the races again.
I appreciate your answer. Our time is short. Let me get to one more question that I think is very important. Under the first Trump administration, the number of people receiving HIV treatment in Africa through the President's Emergency Plan for AIDS Relief, otherwise known as PEPFAR, it increased, this is during the first Trump administration, from 13 million people to 18 million people across 50 countries, primarily in Africa. Africa has about 1.3 billion people today, or in 2021, it's projected to have 2.5 billion people by 2050, or 25% of the global population. In 2020, PEPFAR reported that 2.8 million babies were born without HIV. That was something that would not have happened but for the PEPFAR program. So it has simply been one of the most successful public health programs in the world and saved approximately 26 million lives. Failure to continue this program, in my view, would risk ceding that leadership to adversaries like China. And I'd like to know whether you support the objectives and goals of PEPFAR, and would you work with me and my colleagues to make sure that this program continues to provide life-saving antiviral drugs to people who are most in need?
I absolutely support PEPFAR, and I will happily work with you to strengthen the program.
Thank you. Senator Bennett.
Thank you, Mr. Chairman. Thank you, Mr. Kennedy, for being here this
is
morning.
Michael Bennett, Senator from Colorado, Democrat, RFK Jr. hearing to be HHS Secretary, speaking before the Senate Finance Committee.
In the U.S. Senate, and this committee is being asked to fulfill a really important responsibility, which is to decide whether to confirm Mr. Kennedy to one of the most important health care jobs in America. And the reason I think it's so important is for many of the reasons you said in your opening statement, which is that we live in the richest country in the world, and we have some of the worst health outcomes of any industrialized country in the world. We live in the richest country in the world, and we have some of the lowest life expectancy rates of anybody in the industrialized world. I was a school superintendent before I was in this job, Mr. Chairman, and I can tell you that Mr. Kennedy's right, that when I look at the kids in the Denver public schools, if we don't change the way we eat in this country, 40% of them are going to suffer adult diabetes as a result of their diet. And we're, as I said, spending more than any other country in the world, and our families, every single person's constituents in this Senate are facing chronic shortages when it comes to health care. My friend from Texas, Senator Cornyn, has been a champion on mental health care. We have an epidemic, as he knows, across this country in mental health care, partly because of what the massive social media platforms that were sitting behind the President of the United States have inflicted on our children for their profit in the last decade or so. So we have no shortage of challenges to confront, and I even agree with some of the diagnosis of Mr. Kennedy. What is so disturbing to me is that out of 330 million Americans, we're being asked to put somebody in this job who has spent 50 years of his life not honoring the tradition that he talked about at the beginning of this conversation, but peddling in half-truths, peddling in false statements, peddling in theories that, create doubt about whether or not things that we know are safe are unsafe. Not that every vaccine in America is unsafe, not that you can't possibly have an adverse reaction, but that parents and children in my old school district and school districts all over this country would be better off not getting vaccinated than getting vaccinated. Unlike his own children who were vaccinated, unlike the people he invited to his house in Los Angeles for their party who were vaccinated. For everybody else, it's about peddling these half-truths. And he says it with such conviction that you want to believe him. And Mr. Kennedy, I just have there are many, many things in the record, but I hope that you could answer these questions, yes or no. I've tried to ask these in a manner that's faithful to what you actually said, because I didn't want to have a debate about whether you actually said them. So I'm asking you, yes or no, Mr. Kennedy. Did you say that COVID-19 was a genetically engineered bioweapon that targets black and white people, but spared Ashkenazi Jews and Chinese people?
I didn't say it was deliberately targeted. I just quoted an NIH-funded and NIH published study.
Did you say that it targets black and white people but spared Ashkenazi Jews?
I quoted a study, Your Honor. I quoted an NIH study that showed that
I'll take that as
certain
yes.
races
I have to move on, I have to move on. Did you say that Lyme disease is highly likely a materially engineered bioweapon? I made sure I put in the highly likely. Did you say Lyme disease is a highly likely militarily engineered bioweapon?
I probably did say that.
Did you say that?
And that's what the developer of
I
Lyme
want
disease
all of our
said.
colleagues to hear it, Mr. Kennedy. I want them to hear it. You said yes. Did you say that exposure to pesticides causes children to become transgender?
No, I never said that.
Okay, I have the record that I'll give to the chairman, and he can make his judgment about what you said. Did you write in your book, and it's undeniable, that African AIDS is an entirely different disease from Western AIDS? Yes or no, Mr. Kennedy?
I'm not sure if I made that.
Okay, I'll give it to the chairman, Mr. Kennedy. And my final question, did you say on a podcast, and I quote, "I wouldn't leave abortion, to the states. My belief is we should leave it to the woman. We shouldn't have the government involved, even if it's full term." Did you say that, Mr. Kennedy?
Senator, I believe that every abortion is a tragedy.
Did you say it, Mr. Kennedy? This
believe-
matters. It doesn't matter what you come here and say that isn't true, that's not reflective of what you really believe, that you haven't said over decade after decade after decade, because unlike other jobs we're confirming around this place, this is a job where it is life and death for the kids that I used to work for in the Denver public schools, and for families all over this country that are suffering from living in the richest country of the world that can't deliver basic health care and basic mental health care to them. It's too important for the games that you're playing, Mr. Kennedy. And I hope my colleagues will say to the president, I have no influence over him. I hope my colleagues will say to the president, out of 330 million Americans, we can do better than this.
Thank you. We need to move on. Senator Cassidy.
Mr. Kennedy.
This is Senator Bill Cassidy, Republican of Louisiana. You're listening to the confirmation hearing for Robert Kennedy Jr., the HHS Secretary nominee. The questioning continues.
With this context, what will you do about dual eligibles?
About
dual eligibles?
Well, dual eligibles are not right now served very well under the system. Those are people who are eligible for both Medicaid and Medicare. I suppose my answer to that is to make sure that the programs are consolidated, that they're integrated, and the care is integrated. I look forward to working with you, Dr. Cassidy, on making sure that we take good care of people who are dual eligible.
And how do you propose that we integrate those programs? Does Medicare pay more, Medicare pay less, Medicaid pay more, Medicaid pay less? How do we do that?
Well, I'm not exactly sure because I'm not in there. I mean, it is difficult to integrate them because Medicare is under fee-for-service. It's paid for by employer taxes. Medicaid is fully paid for by the federal government, and it's not fee-for-service. So I do not know the answer to that. I look forward to exploring options with you.
Republicans, again, are looking at ways to potentially reform Medicaid to help, pay for President Trump's priorities, but to improve outcomes. What thoughts do you have regarding Medicaid reform?
Well, Medicaid is not working for Americans, and it's specifically not working for the target population. Most Americans, like myself, I'm on Medicare Advantage, and I'm very happy with it. Most people who are on Medicaid are not happy. The premiums are too high. The deductibles are too high. The networks are narrow. The best doctors will not accept it in the best hospitals. And particularly, Medicaid was originally designed for a target population, the poorest Americans. It's now been dramatically expanded. And the irony of the expansion is that the poorest Americans are now being robbed. Their services have dramatically decreased, even though we've increased the price of Medicare by 60% over the last 4 years. The target population is being robbed.
With that said,
other options.
Obviously, you've thought about that, and I appreciate that. What reforms do you recommend, again, that would improve services, I suppose, but also make it more cost efficient?
Well, President Trump has given me the charge of improving quality of care and lowering the price of care for all Americans. There are many things that we can do. I mean, what we want to, the ultimate outcome, I think, is to increase transparency, to increase accountability, and to transition to a value-based system rather than a fee-based system.
So
rather than a service-based
on
system.
Medicaid in particular, can you just kind of take those kind of general principles and apply it to the Medicaid program?
You know, listen, I think that there are many options with telemedicine, with AI right now. And, you know, there's including direct primary care systems. We're seeing that movement grow across the country. There's one of the largest providers.
So going back to Medicaid though, and speaking of these specific advances, what reforms are you proposing with these ideas vis-a-vis Medicaid?
Well, I don't have a broad proposal for dismantling the program.
Of course not saying that.
I think what we need to do is we need to experiment with pilot programs in each state. We need to keep our eye on the ultimate goal, which is value-based care, which is transparency, accountability, access.
And one more thing, going back to Medicare, you mentioned you're an MA. You mentioned earlier the Medicare fee-for-service. Do you have any kind of thoughts as to whether or not patients on fee-for-service should move into MA, or how should we handle that?
Whether patients
who are on Medicare fee-for-service.
Traditional Medicare?
Yes.
That's their choice right now. I mean, we have, I think, 32 million Americans, or 30 million Americans on Medicare, on traditional Medicare, and then another 34 on Medicare Advantage, roughly half and half. And I think more people would rather be on Medicare Advantage because it offers very good services, but people can't afford it. It's much more expensive. Oh, in answer to your first question, there are all kinds of exciting things that we can be doing, including cooperatives, which President Trump has supported, including health savings accounts, which President Trump has supported. All of these things to make people more accountable for their own health.
And so we'd bring the cooperatives and the health savings accounts into Medicare and Medicaid?
Exactly. We try to increase those, the use of those, and to direct primary care, to continue to transition into a value-based program that is private. Americans don't, by and large, do not like the Affordable Care Act. People are on it. They don't like Medicaid. They like Medicare. And they like private insurance. We need to listen to what they would prefer to be on private insurance. Most Americans, if they can afford to be, will be on private insurance. We need to figure out ways to improve care, particularly for elderly, for veterans, for the poor in this country, And Medicaid, the current model is not doing that. I would ask, any of the Democrats who are chuckling just now, do you think all that money, the $900 billion that we're sending to Medicaid every year, has made Americans healthy? Do we think it's working for anybody? Are the premiums low enough?
We do need to move on. Senator Warner.
All right, we're speaking
Well, I gotta
here,
tell you,
questioning from
for
Senator
literally hundreds of
Mark
thousands
Warner,
of
Democrat
Virginians,
from Virginia, HHS confirmation hearings for Robert Kennedy Jr. in
Health
Washington.
crises on a daily and weekly basis. And some imaginary new plan. And if there was a new plan that was to be the basis of what Trump was going to do in repealing Obamacare, I would have thought by now we'd have seen it. I got to tell you, listen,
Senator, can I reply to
excuse
that?
me, Senator, Mr. Kennedy, I got questions. I appreciate our visit. I know you take your views seriously, and I don't reflexively vote. I voted for 4 of President Trump's nominees already. Got a lot of grief from folks on this panel. But I got to tell you, I saw an email that you put out Monday night, or your campaign did, in a fundraising email. Your presidential campaign celebrated that the freeze on all new regulations, guidance, and announcements is a way to protect unelected bureaucrats from further undermining our health freedom. Then you ask your donors to help pay for your campaign debt. Did your campaign and you put out that?
I don't think my campaign exists anymore.
All right, well, listen, I got to tell you this. Somebody's out there soliciting money for it. Maybe you ought to find out who is. So the fact that you celebrate this freeze, do you think that was a good idea to put all of this on hold for 90 days? Funding and any kind of further work? NIH research?
As Chairman Crapo pointed out.
I'm not asking for, I love Mike Crapo. I'm asking you. You're up very, very important position.
As he pointed out, Senator, the portals that were closed were not closed as a result of the Trump administration.
Let me just tell you, I'd like you to explain, excuse me, sir, I'd like you to explain to a domestic violence center in Richmond that's saying because of this freeze, they may have to close down, where those battered women to go. Or a rural nonprofit I've got in the Shenandoah Valley who's saying that freeze is going to potentially shut down their ability to operate. So I guess if you deny or don't know what your campaign's sending on, you don't know if you raised a lot of money Monday night.
I'm saying that the Trump administration
You don't know if you raised a lot of money.
The Trump administration has made clear that it does not want to freeze benefits for any Americans under Medicaid or Medicare, and I do not want to dismantle Medicaid.
The freeze is affecting beyond Medicare and Social Security. I would hope you would have known that to be able to answer some of this. Now, you've said publicly you want to immediately get rid of 600 NIH workers on day one. When we had our meeting, you said you'd actually like to get rid of 2,200 people from HHS. Which offices are you going to start cutting and riffing these 2,200 workers from?
Senator, there's 200 political appointees that are changed during every administration.
So if you got rid of those 200 political appointees, you're not going to replace them with your political appointees?
Well, President Biden this year changed 3,000 employees at HHS. 3,750
so
at NIH.
You're 2,200. What departments are you going to pick them from?
Well, the same as President Biden did when he changed 3,000 out.
Let me just, I'm down to a minute 30. The chairman's been generous with colleagues on both sides. I may have to go a couple minutes over, but let me just say, so let's just answer, this would be, I hope, since you're asking to become the top healthcare official in the United States in terms of HHS, huge ramifications, and part of this job is to be the senior advisor to the president on health issues. So when we're looking at this purge and we're looking at laying off workers, when we're looking at potentially the president's illegal offer to try to buy out federal employees, which I would say to any federal employees, think twice. Has this individual in his business world ever fulfilled his contracts or obligations to any workers in the past? But if you are in this position, will you pledge that you will not fire federal employees who work on food safety, work on trying to preventing things like salmonella?
Senator, there are 91,000 employees.
So that I take that as that's a simple yes. And I'm going to take that as a no.
Run that
I take that as a no. We talked about protecting Americans from cyber criminals, something we need to do a lot more on. Will you commit not to fire anyone in the health arena who currently works on protecting Americans from cyber attacks in their healthcare files?
I will commit to not firing anybody who's doing their job.
Based on your opinion, based upon your opinion, or your political agenda, or Mr. Trump's political agenda?
Based upon my opinion.
So I guess that means a lot of the folks who've had any type of views on vaccines will be out of work. Will you freeze grant funding for community health centers? Will you freeze federal funds for community health centers, the way the current administration has done?
The White House has made clear and no funds are going to be denied to any American for benefits in any program.
Do you know what happens at community health centers? Those are direct.
Are you talking about the Indian health centers?
No, I'm talking about community health centers across the country.
I understand that. I mean, I strongly.
So you're going to excuse Indian health centers, which is good, but others are not. They're going to get their funds frozen.
I strongly support community health centers, as does the president.
So does that mean you're not going to freeze the funding that is currently frozen?
The White House has made clear that none of that funding is supposed to be frozen.
Sir, the direct payments are different than how the government operates. We fund the federal government down to community health centers. As a former governor, there's lots and lots of state programs that are related to health care that come from the federal government, they come down to the state, then it goes to local programs. All of those don't directly pay out $1 at a time, but they come from federal funding. They are all, even though they keep changing the guidance on a minute-by-minute basis, based upon 9:45 or 10:30 or 10:45, whatever time it is today, those funds are still frozen. Sir, I just honestly, I want to give you a fair shot, but I don't feel like you approach this job with the knowledge and candidly your willingness not to commit. Try to recommend to the president to make sure these funds are unfrozen and that people's lives are at stake is a very disappointing answer. Thank you, Mr. Chairman.
Senator Langford.
Chairman, thank you. Mr. Kennedy, it's good to see you again. We had some great visits in my office. We've done some.
All right, that's Senator James Langford speaking now. He's a Republican from Oklahoma.
Different issues and backgrounds and things. You've been able to address a lot of them today and just different questions to be able to clear up social media rumors and the things that are out there on it. So I do appreciate that. We've talked about pharmacy benefit managers. We've talked about the nursing home rule the Biden administration put down. We talked about your views on agriculture and commercial and row crop agriculture. We've talked about food issues, and you made it very, very clear. You're not going to tell Americans what to eat, but you do want Americans to know what they're eating. And I think that's a pretty fair perspective on that. I do want to talk to you about some areas that you and I have talked about as well. We have some disagreements, you and I, on the issue of life. And when life begins on that, you've been very outspoken on that. And we've had some good opportunities to be able to talk about that. Title 10 is specifically in the HHS area. This has been an area that has been interpreted for a long time, and President Trump in the first administration interpreted that rule to say that his administration will prohibit the performance, referral for, or promotion of abortion as a part of the Title 10 program. That he made that very clear in the first administration. Obviously, that's his decision to make again on that, on how he wants to handle that, and he's made a lot of public statements on that. The Biden administration not only reversed that, not only rescinded that rule, but they went one step the other direction. In my state in Oklahoma, as you and I have talked about, the Biden administration cut off funding to the state of Oklahoma for AIDS testing, for breast cancer screening, and for other areas of poverty health care because my state didn't promote abortion. It wouldn't provide. If my state wouldn't promote abortion in the state, we got cut off for federal funds for AIDS testing and for other things. My simple question to you is, how are you going to handle Title 10 on that? I saw how President Biden handled that in the punitive measures that came on my state for those that are in rural health care. How are you going to handle Title 10?
I'm going to support President Trump's policies on Title 10. I agree with President Trump that every abortion is a tragedy. I agree with him that we cannot be a moral nation if we have 1.2 million abortions a year. I agree with him that the states should control abortion. President Trump has told me that he wants to end late-term abortions. and he wants to protect conscious exemptions, and that he wants to end federal funding for abortions here or abroad. That's Title 10. I serve at the pleasure of the president. I'm going to implement his policies.
Thank you for that. President Biden, when he came in, immediately closed down the Office of Civil Rights and Conscience Protections within HHS. There's a statement that's come out recently that he's going to reopen that office again to be able to protect the civil rights of Americans. One of the things that Javier Becerra did immediately when he came into HHS was conscience protections for medical professionals that were being compelled against their conscience to perform medical procedures that violated their conscience. Javier Becerra stepped in immediately into HHS and withdrew that and said, no, the federal government will tell you what you believe about these issues. You don't have conscience protections anymore, and refuse to protect those folks. Will you step in and say that healthcare individuals have the right of conscience again, as the federal law allows?
Yeah, I mean, the first thing that occurs to me when you ask that question is, what patient would want somebody doing a surgery on them that, believes that the surgery is against their conscience being forced to perform that? I don't know anybody who would want to have a doctor performing a surgery that the doctor is morally opposed to. Listen, I came from a family that was split on life and choice. I have cousins today who believe that abortion at any stage is equivalent to homicide. Now, there are other people who believe the opposite. But the good thing in my family that I really loved is that we were able to have those conversations and respect each other. And I wish that we could do that nationally. And if forcing somebody to participate in a medical procedure as a provider that they believe is murder does not make any sense to me. We need to welcome diversity in this country. We need to respect diversity, and we need to respect each other when we have different opinions, and not force our opinions on other people.
Yeah, thank you for that. The FDA, under the Biden administration, changed the rules for the chemical abortion drug and said you no longer need to see a physician. So if you have an ectopic pregnancy or all kinds of, don't even go anymore to see a physician. But they also changed an area that has been, something that's been very particular, you've talked about a lot, and that's transparency. They changed the position and said, don't tell us if there's a side effect on this drug unless she dies. But other than that, don't tell us anymore. Literally, don't give transparent information to the American people or to the women who take this drug anymore. We don't want that reported. My question to you is, will FDA move to be able to actually give transparency to the American people and to say, this drug is no different than any other drug. We're not going to protect it just because it's political for some folks. People should know side effects on this drug, and there should be reporting.
Yeah, I mean, it's against everything we believe in this country that patients or doctors should not be reporting adverse events. We need to know what adverse events are. We need to understand the safety of every drug, mifepristone, and every other drug. And President Trump has made it clear to me that one of the things, he is not taking a position yet on mifepristone, a detailed position, but he's made it clear to me that he wants me to look at safety issues. And I'll ask NIH and FDA to do that.
Thank you.
Senator Whitehouse.
Okay, we're listening to the Senate hearings. Robert Kennedy Jr., Washington, D.C. for HSS. We're going to dip out of that for just a moment. We have a special guest here. It is earnings day here. It's another big earnings day, as in addition to being a Fed day. One of the companies reporting earnings today was T-Mobile. Put out some really good numbers. Stock up 8.5% on the news. Mike Seaver joins us. He's the CEO of T-Mobile. He joins us here in our Bloomberg Interactive Brokerage Studio. Mike, thanks so much for coming here.
Thanks for having me, guys.
What does the market like about the results you put up today?
Well, look, we're just consistently outperforming expectations, and that's what the market looks for in a business like ours. We're taking share, we're growing, and then across the board, we beat expectations. We just finished the strongest growth year ever in our history, and that's saying something, because we have a storied growth history in this company. And a lot of people wonder, is the big growth, run behind us? And we just demonstrated yet again, no, it's not.
It's hard for me to get really excited about my mobile service provider, but your customers, it's like they're in a cult. What's the secret sauce? That's my softball question.
You know, our corporate values start with this basic idea: love our customers. You know, give them more, ask less of them, and they notice. That's just a huge part of our brand. And we have this thing we do called T-Mobile Tuesdays, where every week customers come to our T-Life app, which has 50 million users, and they engage to find out how are we rewarding them this week. Do you know what this week's was? We gave away a Shack burger, like the world's best burger, for free to every single T-Mobile customer.
Netflix too, if you saw it.
Absolutely.
So, Mike, you're in a competitive business. I think about the wireless business. The barriers to change are pretty minimal. Churn is always an issue. Your competitors are deep-pocketed. They're good competitors. Is it just you guys switching customers all the time, just for deals? Talk to us about the churn for your company, your business.
Well, churn's at historic lows across the industry, not just T-Mobile. We just had our best churn year ever. So people aren't switching a lot. When they are switching, the net share takers T-Mobile. So this is a great trend. You know, I don't need for others to fail in order for us to succeed in our business. This is a great neighborhood. We just happen to be the best house in the neighborhood. And so we're outgrowing everyone, but this is a healthy, vibrant sector. Everyone's, growing and making money. I think that's great. Part of it is people can't get enough of the service that we all offer. At T-Mobile, we just guided again to a big year of revenue gains per customer. And that's not because of pricing. It's because customers are self-selecting up our rate card to our higher priced offers because they see the superior value and they want what we have to sell. That's a great dynamic, not just for T-Mobile, but for the industry.
The growth strategy is organic or M&A or what?
It's organic, principally. I mean, we do have a number of M&A deals in the pipeline that we're intending to close this year, centered around fiber, centered around, other add-ons. We're also in, acquiring a cellular company, U.S. Cellular. So, but by far, the growth is an organic growth story focused on taking share, adding revenues, deepening relationships with the existing customers that now number well past 100 million.
Some of those
customers
I don't understand, like outdoor advertising. What does that have to do with your business?
Yeah, we just announced the acquisition of a company called Vistar, and we're a $1 billion advertising support company already. So this is a significant business for us. We call it marketing services for marketers by marketers. T-Mobile is a very famous marketer, and marketers want services from us. So we provide that already. But our T-Life app, part of what it does is it asks customers by the millions whether they would like to opt in to make their digital life better and their advertising more relevant. And then we can use data to provide marketers with an ability to put advertising in front of customers that they will actually appreciate. And our dream with place-based marketing, outdoor marketing, that's the Vistar acquisition, is to do that for the first time ever in outdoor advertising, so that for the first time, outdoor advertising, place-based advertising, can become an addressable market.
Yeah, it's interesting. I love the outdoor business. You can't switch channels on that. I took all those companies public back in the day. Apple, Mark Gurman, Bloomberg News. Apple has been working with SpaceX and T-Mobile on Starlink. What is Starlink?
Okay, so this is the ability to connect your mobile phone directly to satellite service. This is a huge breakthrough. We announced our intention to partner with SpaceX over 2 years ago, and now finally it's coming to market with opening of our beta a couple weeks ago. We're bringing on thousands of users, and soon, way more than that. We're going to throw the doors open on this thing. If you can see the sky, you're connected.
You
That's
don't
our
have to
vision.
point the iPhone at the...
That's correct. These are low Earth orbit satellites, so they're easier for your phone to find and vice versa. But this country, you guys, has 500,000 square miles uncovered by any cellular network. And it's a massive part of our landmass, and we're about to close that coverage gap.
Okay, so if on my bucket list is a trip to the South Pole, I don't need cellular service down there. I could just use a T-Mobile, iPhone, Starlink.
Well, I'm going to have to check on how good the LEO coverage is. But one of the things you point out, and very quickly to follow our terrestrial coverage across the continental U.S. and big parts of Alaska, is the world's oceans. That's a big piece of this because now you'll be able, not right away, but as soon as we are able to turn it on, you'll be able to get your service across the U.S. and as you travel around the oceans outside the reach of any cellular signal.
It's in beta testing right now? It's just confined to messaging?
Hundreds of satellites are in the air. We have a free beta service going on. We're starting to let people into it. Right now it's text messaging only, but fast to follow will be light data services and eventually voice.
So I can get rid of my satellite phone. We don't need that anymore?
I think the time will come when that's the case.
Yeah.
Top line growth, 4 to 5% for you guys. That's how I think about the wireless business. Is that all pricing? If so, how do you think about the pricing environment out there?
It's share taking and self-selecting up our rate card, very little pricing. And so those are the big dynamics. Postpaid service revenue growth, 8%, more than double the rate of our peers. And so this is, a dynamic that makes T-Mobile so different in this space, because we're not only growing the top line, but we're translating it into financial growth on the bottom line. 25% year-over-year growth in cash flows, $17 billion, our highest ever.
Now, how do you raise prices? You sort of touched on this just briefly before, but how do you raise prices without scaring away your cult members?
Cult members. Well, one thing is people, we have a rate card with a variety of options, and people choose at an increasing rate the prices that are higher up because they want what we have to sell. Do you know that 60% of our new customers coming in the front door choose one of our 2 most premium plans? Because those are the ones that are most packed with value, and they're here for a reason. They want more data. They want the experience that T-Mobile can provide with the world's best 5G network.
Subscriber acquisition costs, how are they trending for you guys these days?
They're pretty flat, and that's good. We're very comfortable with this business model. It's a high CLV, value exchange. One of the things about this business, it's reliable, it's predictable. We do what we say. We try to exceed what we say, and it's growing. And that's one of the things that really distinguishes us in a group of peers, not just in the U.S., but around the world.
There is a Fed meeting today. Can you tell me how, if at all, rates affect your business?
Well, we're a big debt issuer, so obviously it's relevant in the long haul.
What's the debt right now?
With 2.5 leverage against EBITDA, so it's it's very significant. EBITDA's in the 31, very significant debt, but it's also a stack that's investment grade, it's long term, it's spread out, so it doesn't affect us in an immediate way, but in the long haul, of course, as a debt issuer.
Where would you like that leverage ratio to be?
Right where it is.
Okay. Market structure in the wireless business, 3 main players. Okay. Is there room for a 4th? And I think about my old friend Charlie Ergen. For the last 15 years, I have no idea what he's doing with the spectrum, and I don't think the market knows either.
Well, he's operating, a major brand and Boost Mobile, and the other thing is the cable companies, Charter and Comcast taken together, who don't overlap, kind of constitute an additional carrier as well. And they are really growing their mobile service at a significant pace. Not as significant as us. We're the growth leaders, but it's it shows that this is a vibrant market with a lot of competition.
And the smaller markets, that's a big deal for you too, right?
Yeah, 40% of the country, everything that's not the top 100 markets, we call smaller markets in rural areas. It's a huge source of our growth right now.
And so on a revenue per user, how do you guys stack up to your peers?
They're both above us.
Okay.
And it shows that there's room to run for us because, we came from a place that is much more value-oriented. We're never going to give up those value roots. I mean, the lower prices and better deal is a big part of who we are. But at the same time, last year we addressed some very outdated rate plans that just don't make sense anymore after a decade. And there's more opportunity like that as well, as long as we're true to who we are, which is a great value.
What's the biggest challenge you face going forward right now?
Well, it's demonstrating to people that this is not just a present growth story, that it has legs. And that's a big piece of what I spend my time on, is making sure that, out in 26, 27, 28, that this growth keeps right on rolling in. And you see that in our organic strategies, but also some of the inorganic things we've talked about.
All right, Mike, thanks for coming in. Really appreciate it. Mike Sievert, he is the CEO of T-Mobile. Again, the company just reported earnings today, beat earnings on the top line and the EBITDA line, which is where Mike was saying a lot of these investors look. And right now we got the stock up about 8.5%, so a good day for T-Mo. Stock trading over the last 12 years about up 47%, so some solid results there for the stock. We appreciate Mike coming in. We were listening to the Senate Finance Committee having confirmation hearings for Robert Kennedy Jr. for
Getting
HHS.
a little testy
Getting
there,
a little
and it's
testy.
going to get testier as we move on.
Mark, should we go back to D.C.? All right, let's hit it. Let's go back down to Washington, D.C. Listen to our government in action.
And allowing these pills to be obtained through the mail. In fact, the FDA's own prescribing label mentioned that 3 to 5% of women taking this drug end up in the emergency room. My question is, if confirmed as Secretary of HHS, will you commit to working with the FDA Commission to review these deregulatory actions that are threatening the safety of
We're
women?
listening to Senator Steve Baines questioning Robert Kennedy Jr. As Senate Finance
Sorry,
Committee.
Senator. As I said to Senator Langford, I think it's immoral to have a policy where patients are not allowed to report adverse events and where doctors are